Distinguished guests, speakers, ladies and gentlemen, good afternoon. Welcome to the inaugural event of the HKEX Corporate Access Series. My name is 𝗙𝗻𝗲, Assistant Vice President of Global Issuer Services at HKEX, and I'm honored to be your MC today. Our new Corporate Access Series offers you an opportunity to hear from senior leaders and sector experts, engage in high-level exchanges, and listen to insightful presentations from Hong Kong-listed companies. As a leading global exchange group, Hong Kong Exchange looks forward to bringing you more events as part of the Corporate Access Series, providing Hong Kong-listed companies with a platform to engage with investors and market participants. Today, our focus is the insurance sector. We hope that through today's event, we can work together to connect capital with opportunities and to connect the insurance sector with innovation. We would also like to take this opportunity to thank all of our speakers, sponsors, and supporting organizations. Now, may we invite HKEX Chief Executive Officer, Mr. 𝗙𝗵𝗲, to deliver the opening remarks. Mr. 𝗙𝗵𝗲, please.
Good afternoon, everyone. A very warm welcome to our first Corporate Access Series. Though I'm here with you virtually, I'm excited to connect with you as we work together to build and progress our markets and the ecosystems they support. We're very much a purpose-led organization focused on connecting, promoting, and progressing our markets for the prosperity of all. As we look to build the marketplace of the future, we're fully committed to supporting the companies of tomorrow, helping them to create jobs, drive innovation, and power the post-pandemic recovery. We're passionate about connecting capital with opportunities and are constantly looking for ways to increase the attractiveness, vibrancy, and diversity of our markets. We seek to support the development of our issuers at every stage of their life cycle. I'm delighted to be opening our first corporate access event, bringing ideas, companies, and investors together, promoting dialogue and connectivity between market participants, exploring market trends, and identifying opportunities together. Given Hong Kong's positions as Asia's leading insurance hub, it's great to be starting our new Corporate Access event series by taking an in-depth look at the insurance sector. The insurance industry plays an instrumental role in making Hong Kong a world-class financial center. Total gross premiums for Hong Kong's insurance industry amounted to over 600 billion Hong Kong dollars in 2021, according to the Hong Kong Insurance Authority. Hong Kong is also the preferred base in Asia for major insurance groups. And in 2021, 13 of the world's top 20 insurers were authorized to do business in Hong Kong. Today, 70 insurers are listed at HKEX, accounting for 5.5% of the total market capitalization of our equity markets at the end of 2021. 6 of those insurers are amongst the top 20 insurers globally by market cap. Importantly, reflecting Hong Kong's position as an international market, we have a diverse mix of global and Chinese insurance giants listed here, including AIA, China Life, Ping An, and Prudential. Looking ahead, as Hong Kong continues to expand its role as a regional insurance hub, HKEX will have an important role to play in helping insurance companies raise capital to fuel their growth ambitions. HKEX IPO franchise is supported by a range of characteristics that make Hong Kong very attractive to a broad range of companies from various sectors, including those from the insurance sectors. These attractive characteristics include a strong regulatory framework, a diverse and liquid international investor base, a growing product and investment ecosystem, a highly experienced professional community. HKEX is one of the world's leading fundraising centers. A total of 98 company listings raised 331 billion Hong Kong dollars in 2021, and our IPO pipeline remains strong. The DNA of our market continues to evolve too, reflecting the vibrancy of Hong Kong as a financial center. For example, during 2021, we welcomed 59 new economy companies, including 31 companies with weighted voting rights, Chapter 18A healthcare and biotech firms, and secondary listed companies. These new economy companies accounted for 88% of IPO funds raised in Hong Kong in 2021. We're always interested in hearing from innovative or disruptive companies which are interested in tapping into Hong Kong's deep and liquid markets, whether they are green tech, biotech, fintech, or insurtech. In addition to providing a tried, tested, and trusted route for IPO fundraising, HKEX offers wide-ranging support for a diverse and vibrant secondary market. After listing, issuers can benefit from our entire product ecosystem, including ETPs, structured products, and derivatives. Our pioneering Stock Connect scheme enables eligible HKEX issuers to tap into a huge and rapidly growing mainland investor base. Stock Connect once again set new records in 2021, with northbound and southbound seeing record annual turnover of 28 trillion renminbi and over 9 trillion Hong Kong dollars respectively. These numbers represent annual growth rates of 31% and 70% respectively. Similarly, ADT also reached record highs. On top of our deep and supportive secondary markets, HKEX is committed to helping companies with their financing needs throughout their corporate life cycle. This means offering them best-in-class services, supporting their follow-on offerings and bond issuances, and helping them connect with the broader financial ecosystem that HKEX supports. In Q3 2022, we're looking forward to launch IR Connect, a brand new platform through which issuers can build connectivity with the investor and analyst community. We're also excited to bring you this new corporate access series, providing Hong Kong listed companies with a platform to engage with investors and market participants, and encouraging dialogue on the latest trends shaping IR best practices, helping enable vitality and liquidity across our markets. I believe that events like this exemplify capital markets at their best. As a super connector, we're very much focused on promoting vital exchanges and dialogues between investors, corporates, and market participants, all of which are crucial to enhancing market understanding, supporting companies' fundraising needs, and propelling issuers' global ambitions. Today, we're delighted that representatives from leading insurance companies are here to share insights and identify opportunities on our first panel discussion. And since we always have an eye on the future, we're also excited to welcome panelists from some of the most innovative industry unicorns who will share the latest developments shaping the fast-growing insurtech sector in our second panel discussion. In the final part of our event today, we'll introduce a series of exciting and thought-provoking presentations from a range of companies listed here at HKEX, which, with such a rich lineup, I believe the event will be a fantastic and inspiring one to connect corporates and investors with ideas and insights. Despite the complex global geopolitical landscape, Hong Kong's financial market continued to demonstrate their resilience, adaptability, and relevance. With our vision to build the marketplace of the future, we will continue to enhance the attractiveness, depth, vibrancy, and diversity of our markets. Our goal is to strengthen our position as a preferred capital raising, risk management, and trading venue of choice, connecting people, companies, and markets with opportunities, ideas, and a sustainable future. I would like to express my deep appreciation and thanks to everyone who's taking this journey with us. I hope you enjoyed the rest of the sessions. Thank you very much.
Thank you, Mr. 𝗙𝗲𝗄𝗧, for opening today's webinar. In the next session, we have arranged 2 panel discussions on the recent development in the insurance sector. The theme of the first panel is Challenges and Opportunities in the Asian Insurance Sector. Despite a macro backdrop filled with doubts and some uncertainties, Asia's insurance market creates some of the world's most tremendous opportunities, but also poses complex challenges to insurers. What are the differences between insurance in Asia and other markets? What are the growth drivers and challenges in the Asian insurance market? Given the recent pandemic situation in Hong Kong and elsewhere in Asia, how can the insurer cope with what lies ahead? Today, we are pleased to have the leading players in the sector to shed light on how they seize the opportunities and tackle the challenges. May we now invite the moderator, 𝗙𝗲𝗲 Yu, co-head of markets from HKEX, as well as the panelists, Gordon Watson, Chief Executive Officer from 𝗙𝗏𝗏 Asia and Africa, Ben Lin, Investment Analyst from Capital Group, Michelle Ma, Head of Hong Kong and China Insurance and Leasing Research from Citi, Nick Nicangelo, Chief Executive Asia and Africa from Prudential. 𝗙𝗲𝗏, over to you. Thank you.
All right, thank you very much. I hope you all are going to have a great time today. It's my real pleasure to welcome all of you to our panel here today, which is about challenges and opportunities in the Asian insurance sector. Today, I'm very pleased to have a lot of powerful leaders coming to speak to us with Gordon, Nick, Ben, and Michelle. We're going to share a lot of our thoughts in the sector and hopefully a lot of great insights. So I'd like to jump right into it with a quick intro, maybe starting from Gordon and then follow on with Nick and then Ben and Michelle. A little bit about yourself and your company.
Cheers. Thanks, 𝗙𝗲𝗏. My name is Gordon Watson. I've been in Asia for 25 years. I'm the CEO for 𝗙𝗏𝗏 in Asia and Africa. 𝗙𝗏𝗏 is a leading insurer, multi-line, so life, health, and property and casualty, commercial lines, and retail, P&C, etc. I started my career when I was 21 in New York. Unfortunately, I didn't lose my Scottish accent, but I have worked all over the world since then. In Africa, in Dubai, in London, Japan, Korea, etc. But I really love being here in Asia. Perhaps one of the 2 other things that I think are relevant. One is I was very much involved in starting the Shared Value Initiative project here in Hong Kong with lots of other multinationals and local Hong Kong companies to really make a difference and put the social issues in Hong Kong and Asia at the center of a corporate strategy, not just the usual CSR. And the last thing would be I have a big passion for mental health and really trying to reduce the stigma for mental health around the world. I'm a member of the One Mind Guiding Council Executive Committee, where we really are trying to make a difference through collective impact of many companies working together. So great to be here, 𝗙𝗏𝗏. So I'll pass over to Nick.
Thank you, Gordon. Good afternoon, everyone joining the session today. Let me start by introducing Prudential before covering myself. As 𝗙𝗏𝗏 said, I represent Prudential PLC on the panel today. Prudential was founded in Victorian Britain over 170 years ago and for decades it had successfully operated across Europe, the United States, and Asia. However, following a strategic restructuring of the group, which was completed last year, and which saw us spin off our UK and our US operations, today Prudential is a pure play Asia and Africa life and asset management business with a very broad geographic reach, spanning 23 markets, 15 of which are in Asia, giving us access to around half of the world's population. With top 3 market share positions in the majority of the markets that we currently operate in, with sizable distribution capabilities through agency, bank relationships, and other digital assets across the entire footprint, and a very broad product set spanning life, health, savings, and investments, with ticket sizes ranging from as little as 20 cents a month to thousands of dollars a month, thereby ensuring that we can serve all segments of society. While the majority of our shares are listed in the London Stock Exchange, our recent $2.25 billion share issuance in Hong Kong under the 2378 stock code has finally made it possible for investors in the region to own Prudential. As for me, I have been with Prudential for 12.5 years, initially as Group Chief Financial Officer, and in the last 5 years as the Asia and Africa Chief Executive. I have been in the privileged position to be part of the strategic transformation of the group and to drive the growth of our business here in the region. In the last 5 years, Prudential Asia has doubled its embedded value in Asia to 46 billion, grown operating profits at an annual compound growth rate of 13% to $4 billion US, and has increased assets under management 1.8 times to 258 billion. We've also delivered a 4-fold increase in new business profits and embedded value in China, which is a particular area of focus for us. What makes it even more remarkable is the fact that all of this was achieved through a period that coincided with many changes in regulations, volatile markets, a global pandemic, and at times over the last 2.5 years with 4 out of 5 of our workforce working from home. It speaks not only to the resilience of our business, but also to our capabilities and positions us well for the future as the new normal emerges. And maybe a final comment, I would add that Pru is at a seminal point in our history with the transformation of the group into a fast-growing pure Asia and Africa-focused business, being, in my view, a very fitting way to celebrate our 100 years in Asia next year. With that, I'll pass over to the next panelist.
Thank you, Nick. Ben Lin, I'm an investment analyst with Capital Group based in Hong Kong. We are a global asset manager with headquarters in LA, but with offices around the world. I've been looking at the Asia Pacific insurance sector for about 17 years now, 11 years of which on the sales side and 6 years on the buy side. That's it, and I'm very happy to be here, and I'll pass over to Michelle.
Okay, thank you, Ben. Good afternoon, everyone. This is Michelle Ma, Citigroup's research analyst. I joined the Citi Research in 2013, and since then have established the research coverage spanning across a couple of industries like insurance companies, brokers, asset managers, exchanges, lessors, financial SaaS companies, etc. And currently, I'm leading the equity research for Hong Kong, China insurance and the leasing sectors in Citi. In the past 3 years consecutively, with the joint efforts from our co-workers, we are very honored to be selected by the global insurance institutional investors as the best Asia insurance research team in the globe, especially after Ben left the industry. Today, I'm also very honored to be here with top insurance executives and investors in the world. Thank you, Hong Kong Exchange, for this great opportunity. I will pass it back to Wilfred.
Okay, thank you, Gordon, Nick, Ben, and Michelle for your introduction. A bit of a housekeeping item to the audience. If you have any questions, you can feel free to put in your questions. We have a Q&A collector. And as your questions pop up, I will ask our speakers alongside with it. So that's the first thing I want to mention. And secondly, is I feel very excited to be working alongside with all of you today in this panel in covering this exciting topic. Now, first question, this is a question more, I think, for Nick and Gordon. So different from other mature markets in the US or in Europe, Asia insurance sector in particular is generally regarded as a growth sector in the market. Now, as a leading player in the sector, where do you see the growth drivers and opportunities in Asia? And how do your company, respectively, capture the opportunities and tailor your strategies to these market nuances or differences across the very diverse Asian region? Maybe we'll start with you, Nick, first.
Thank you. That's a very good and a very important question. There are a number of important differences between how insurance is done in the West and what's driving growth, and indeed the equivalent position in Asia. So what are some of these differences? So unlike many markets in the West, in Asia we have very fast growing economies, and they are in turn driving the per capita income of people living in Asia higher. So much so that the 2 billion strong middle class Asians today will grow to be 3.5 billion by 2030. We also have fast growing populations, again, with a prediction that 3/4 of the world's working age population will reside in Asia and Africa by 2030. Life expectancy in Asia is now longer than it was, say, 50 years ago, pretty much at the same level as the West. And with that comes higher consumption of healthcare and the need to fund income in retirement. However, there is no state-funded safety net providing that income in retirement and providing free healthcare provision, which is why 43% of healthcare spend in Asia is paid out of pocket. That compares to 11% in the US, and why retirement savings across many of the markets in Asia range from 0 to 10% of GDP, compared to over 100% in the UK and in the US. Now, governments across the region are encouraging citizens to seek private cover for these needs, which is what they're doing, but the sector in Asia is still in its infancy in terms of meeting these needs. This is evidenced by the fact that insurance penetration is currently still running very low, 3% of GDP, much, much lower than in the West. Put differently, life premium per capita is under $200 compared to $2,000 in the UK and $4,000 in the US. So that speaks to the opportunities. How do we capture the opportunity? Well, first you have to be present across as many places in the region as possible with a respected and recognized brand. You need to have an appropriately broad product range spanning all types of insurance and savings needs, in fact, catering for all budgets. You need to have the distribution capabilities. These are people who are appropriately trained, agents, for example, or bank employees to help customers understand, identify the needs, test that the products are suitable and affordable. And you need to have all that in place, and we're blessed with having over 500,000 agents across our footprint and doing business through 26,000 branches across the region. And you need to have efficient digital assets in order to onboard customers, to service, to underwrite efficiently, to process claims efficiently. And again, those are now table stakes for many players here in Asia. Tailoring by market often will reflect local cultural nuances. They will reflect the way regulation has evolved, maybe the way tax regimes have evolved, and to a degree client preferences. But the needs are universal. So there's a high degree of commonality of approach across the markets.
Gordon?
Yeah, thanks. Maybe I'll just add to what Nick said, because I agree with everything he said there. Asia, clearly, and Africa remain very high growth markets. We managed to grow 32% in APE last year. Actually, in Japan, We even grew higher than that, which I think is surprising to most people. There still remains a market there. I think clearly the pandemic has shifted the way people view insurance. It used to be sold, not bought. And I think particularly in the health and the protection side, people now want to buy this, which is great, which makes it much easier for insurance companies like us. And if we look at the global protection health gap for health specifically, just 2 years ago, it was $600 billion US. That's globally, but 41% of that is in emerging Asia. So that's why investors, etc., really look towards Asia as this massive opportunity. And this is something we've started a while, really focusing the preferred segment of health and protection. But when we look at insurance today versus yesterday, there's been protection, but now prevention, upstream interventions, from the way we behave, etc., can really improve risks. And I think this whole thing of upstream interventions, prevention, as well as protection, is becoming increasingly important. The other area, just to highlight onto Nick, because he mentioned digital, I think the world is becoming offline and online. So for us, we've developed a real online kind of iconic concierge called Emma, where we have 3 million users who really helps guide people through what they need in the health and protection side. But at the same time, the thing about the agency force is we really need to get more quality agents. It used to be quantity, but quality, and really training them and how to understand health, how to understand protection, which is much more difficult than just, perhaps selling a savings product. So I think this is something that has really changed. Product innovation remains super important. Things like, cancer recurrence products is a new thing that we're looking at that we didn't do before. And the last point I'd mention is SMEs. I think the SMEs, particularly in places like the Greater Bay Area, becoming increasingly important. And, the small employee benefit plans. And we've actually started different ways to have, what I would call health and wellness seminars. So in addition to employee benefits, really having those agents, or whether it's digitally, really engaging with people individually to plan their own wellness and health plan for the future. So I think, as Nick said, the opportunities here in Asia are vast, and we're very happy that we're both based here in Asia.
Great. Thank you, Gordon. So I'm moving on to the next questions, and I see a flood of questions already coming in. So I'm going to intermix some of those questions with our as we discuss, our discussions goes on. The next question is for Ben. Actually, how is the growth of the strategic investments that you're seeing in Asia-based insurance companies differing from those in other regions? And what do you see as attractive or challenging? I think that is the first part of the question. Second question I do want to put up and is relating to the same subject, which is, what do you see is the greatest opportunities in insurance tech or insure tech space versus a traditional insurance sector?
Well, that's two long questions. I'll keep my answers brief. I think many characteristics of the Asia insurance space is already shared by Nick and Gordon, and it is those attributes in terms of growth, the growth opportunity, the structural growth opportunity that really makes the sector a focus for a lot of global investors like myself. But I do think that we are at a point in time where there are also challenges when looking at these markets. One thing we have to admit is that if you look at Asia as a whole, we have countries at different levels of market maturity, and as such, they all operate pretty differently. At the same time, you also have regulators at different levels of maturity, so you also have different levels of regulations to consider. I'm sure Nick and Gordon spend a lot of time traveling around Asia, just to try to understand all of this. So I do feel for them, in terms of what they have to endure, in terms of traveling. And in terms of your second question, about technology, I do think that it is a key area of research for a lot of people in terms of technology disruption to insurance, because this is a very traditional sector that we really haven't seen a lot of disruption from technology. I mean, Prudential is a country with a company with a long history, right? And same with AXA. So we haven't really seen any fintech companies that have really made a significant impact on the business model or on whether on the demand side or on the supply side of insurance in Asia, at least. So I think it's still at the early stages. As Nick and Gordon mentioned earlier, distribution is really key, and for the time being, across Asia, offline distribution is still the predominant channel. But every generation is going to be different. So the millennials, who are going to be the customers of Nick and Gordon in the future, might make the decisions differently to my generation or your parents' generation.
Great. Thank you, Ben. Since we are on the technology topic, I want to move on to this question for Michelle. So insurance industry is actually has a lot of technology changes and challenges, and moving alongside with the pace of technology advancements, right? So how do you think new technologies have reshaped the way distribution for insurance companies in the past years and for the years to come?
Thank you. Yes, insurance technology is really a hot topic. And I noticed that the whole second panel discussion will fully focus on this subject. So from my observation in the recent years, I see multiple players from different industries trying very hard to get into this area. So taking China as example, on top of the specialized internet insurance companies, who strive to establish presence in this space, internet giants such as Tencent, Alibaba, TikTok, and plenty of innovative online platforms have joined the battlefield to take a piece of the pie. Many traditional leading insurance companies have also followed suit to develop their in-house insurtech capabilities with massive resources and efforts, so as to establish a competitive edge over peers. While smaller insurers have been turning to third-party intermediaries to attract customer attention as a shortcut before establishing a sizable agency force. So innovative technology has been widely applied or tried in the whole insurance industry's value chain. Big data, AI, you name it. So they try to help insurance company to use the right customer leads and user education for marketing, and even help insurance companies deliver better underwriting results, enhance the operation efficiency and the risk management. In the long term, I'm really looking forward to some insurtech transforming the insurance industry with revolutionary changes. But as Ben mentioned, we haven't noticed any business model changes. It's more still focused on the distribution. The insurance distribution and the retention remain the key applications at the current stage. So talking about the most significant changes brought by technology, I would say in China is effectively raising the insurance awareness among young generation through a more engaging and informative way, and by offering more affordable insurance products as their first touch of insurance. And secondly is to reach citizens in the lower tier cities or even rural areas where traditional agency force establishment has encountered some bottleneck. For example, some mutual aid platforms in China previously successfully attract young users. The 相互保 launched by Ant Financial in 2018 accumulated more than 100 million users within just 2 years. But as also mentioned by Ben, regulators are in different stage, and they their attitudes can change from time to time. So this type of platforms were basically all closed. But according to a survey conducted by Tencent, a typical portrait of internet insurance purchasers could be described as a young netizen aged near just 30s, married, well-educated, and earning much higher than peers. So this is a very high-quality customer group comparatively, and this is harder for traditional agents in China to reach. Meanwhile, China has a vast territory and a large population, there's a huge difference in economic development between different regions. First-tier cities, they have a GDP per capita over 20,000 US dollar, and the lower-tier cities is below 10,000 US dollar. So there are great potentials in the lower cities to increase penetration, but but it's really difficult if you want to expand the agency network to such vast territory. So we noticed some insurers, they already started using user education using some new means with either in-house online marketing or cooperation with third-party online intermediaries in the form of like a short video platforms such as Douyin, 快手, and they also collaborate with some key opinion leaders online in the financial area to do education. This has successfully broken the geographical barriers, and a online insurance intermediary leader. We also covered 惠泽, this company focusing on distributing long-term critical illness products and annuity products. So last year, they saw their first-year premium facilitated doubled the volume, while the whole industry suffered in a tough time. So I think the changes just began, and I think more will come. So just really looking forward to revolutionary changes in the future. Thank you.
Okay. Thank you, Michelle. Thank you. Those are really great insights. Moving on, I want to ask this question in light of the recent pandemic resurgence in Hong Kong and elsewhere in Asia, obviously. How can insurers manage this risk? And how has the pandemic changed the way insurers think about their digital strategy? I probably will start with Gordon first and then Nick.
Yeah, thanks, Wilfred, and I enjoyed listening to Michelle and Ben, and my friend Ben is very tough on Nick and I. But I can assure you there's a lot of disruption, Ben, going on in the industry. I think in life insurance in the past, people only died once. So it's very difficult to have that interaction with your customers every day. And with the advent of health and with the advent of prevention coming on, we need to be much better. And that's why we introduced Emma. And Emma is an avatar. She's a chatbot. She's a digital concierge. She has empathy. She has a human face. We use artificial intelligence. And we have 3 million users already. And when we started Emma, we now have 25 different services in Emma. And we didn't get it right at first. Sometimes we went for services that customers didn't want. Customers want the basic services. So, for example, before COVID, Wilfred, I'd say about 2% of our claims for employee benefits, the outpatient claims, were done digitally. Now, through Emma, over 70%. And people don't unlearn what they know what to do. So we now have 70% of our outpatient health claims coming through Emma, which is great. But then we want to up that so we have engagement for different segments. And a segment that we thought was quite interesting was the senior segment. So we worked with Professor Kawashima in Japan, who's from Nintendo, and we have a brain training game. And that's for people to stop early onslaught of dementia, etc. So we have brain training games, and we didn't know how successful this would be. It's, you have sandboxes. But in the first couple of weeks, we had 400,000 people use that. So these services are becoming much more important. And with COVID, we did a lot more teleconsultation because we had to do that remotely. You can't go and visit your doctor. And also social media gives us a great way, and we're very fortunate in Southeast Asia. We have the biggest banks as our equity partners, so we're pretty lucky there. But in Thailand, we just launched EMA, and we use TikTok, and the population of Thailand is 61 million, I think. But in the first 4 weeks of the launch, there were 409 million views of our video on TikTok, which is, like 4 or 5 times the population of Thailand. I don't know who was watching that, but we have managed to convert that into real business. But just on your point of how do we differentiate, and for me, key, and I'm sure Nick will agree, is data and how we use that data. We use EMA, we use everything we can to gather data. And particularly one example would be substandard lives, where if we have more information, so say someone who had calcified arteries, for example, if they are taking blood thinners, their risk is just the same as someone who doesn't have calcified arteries, so we can charge more appropriate premiums, etc. So this data is very powerful for us to really target better offers, etc. So I do agree with my friend Ben. It's a great industry to be in. Even my kids now are quite interested in insurance. They're like, wow, Dad, what you do is quite cool now. So that never happened before. So I think, as I said, we're glad to be in Asia, and we're glad to be in this time in the insurance industry.
Yep. Nick?
Okay, so automation and digitization was a journey that many players, including ourselves, were on, almost notwithstanding what's happened with COVID. I referenced earlier that we're one of the most successful entities in Asia. We've achieved this success on the back of doing business today with 19 million customers. I also referenced earlier that the opportunity is vast. It's hundreds of millions of customers. So if you ever have ambitions of growing a business to never mind 19 to 50 to 100 million customers, you need much more efficient processes. You need to embrace automation and digitization. What the pandemic has done, it has allowed us to accelerate, if you like, the progress that we would have otherwise have made, but would have taken probably 5 to 10 years. And a lot of it was achieved much, much quicker within a two-year period. One such example was the ability to sell to consumers without having to meet face-to-face. Okay, in the past, that wasn't done. Everyone said it's if you're selling, it's a relationship-based business. Of course it is, but that relationship blossomed if you met with someone face-to-face. Of course, pandemic made it impossible. What do? We integrated all our technology in a ways that we were able to offer pretty much within a week of lockdowns the ability to our agents and to our bank partners to execute a transaction without meeting face-to-face, a bit like we're communicating today. So much so that nearly half of the business that our agency force sold last year was done without meeting the client face-to-face, and about a third of the business that was done through our bank relationships was done in the same way. Similar to what Gordon was saying in relation to their digital initiatives, we launched one ahead of the pandemic. We were fortuitous that it came to be much more relevant in the pandemic. We took the view that one of the reasons that the health market is even more underpenetrated than the life market, the health market is less than 1% penetrated. It was down to awareness and public education of the importance of covering yourself, of the availability of solutions, so lack of awareness of that, and also lack of trust, with consumers potentially worrying that if and when they make a claim, that may not come through. So we launched our own initiative branded Pulse by Prudential. We took the view that we will create an app, therefore infinitely scalable, infinitely accessible, that has a variety of wellness, nutrition, telemedicine, health assessment, fitness type services. That app is available to download for free in 17 of our 23 markets. And we took the view that that would be a way in which people could engage more closely with their well-being, with their wellness, maybe understand more on how to prevent or postpone the onset of some conditions. That's what we did. We had 30-odd million downloads, 13 million registrations, with many of these registrants being new to Pru, and many of these registrants using these services, as I said, to improve their awareness of the importance of well-being, and how they sought solutions to provide, to give themselves some level of protection. It enabled us to create mini products, micro products, as a first, if you like, insurance contract, which can be sold direct to consumers through the app, but also it provided an avenue to make a connection between the users of Pulse to our agency, with a view of looking at the more mainstream or maybe the more longer term requirements. So again, and in doing so, we began to respond to what we were hearing a lot through the pandemic, that a lot of people, as a result of the pandemic, were looking for more flexible solutions, maybe more bite-sized, maybe not whole of life, but shorter duration, also accompanied with services such as telemedicine, nutrition, and so on and so forth, advice. That combined with the realization that we had to expand our product set, not only look after the affluent and the high net worth, but as I said, to become more affordable, by more simpler, more flexible, more affordable for mid-income or younger segments, was how we responded to the pandemic. And that, with the improvements in the awareness, so 9 of our 13 markets hit record level of new business profitability, and we've seen a record level of health and protection cases written in 21, and also total cases written in 21, as I said, as a combination of improving our routes to market, expanding our product set, and helping people understand the importance of savings. Now, all these capabilities, as we now go into the new normal, combined with our already many strengths, means that our business and many others in the sector are much better positioned, much more powerfully positioned as we move forward, as I said, as normality returns.
Great, Nick. Thank you. I think just following on that track, there's a question for Ben from the audience, actually. In terms of fintech, other than distribution, what other areas do you see likely be disruptive to the industry, to the CEOs, that it has been a very challenging year also for China insurance sector? What do you think about the environment, and what would be your recommendation?
First of all, I can't give any recommendation. So let's start with that.
2 questions.
Yeah. Look, I think definitely distribution is very important, as Nick and Gordon would agree, right? I mean, life insurance, at least in Asia, is about selling a promise, a long-term promise, and that personal touch, aspect has been very important in terms of the development of life insurance in Asia, at least for the last century. So, whether there's any model that could disrupt that, I don't know yet. I mean, Nick and Gordon can testify that there has been many attempts. You had bank insurance, you have online insurance recently. So there has been many attempts to kind of try and disrupt that model. But if you look at the statistics, at least in terms of profit contribution, the offline agency model remains very important to all life insurers in the region. So on the supply side, I haven't really seen any significant technology disruption. On the demand side, in terms of product, that we could see more disruption and more innovation. As I said, the millennials might have a different take on what they need, right? So my parents and even my generation will go out there and buy 30-year, 50-year lifetime policies. The millennials may not want that. They may want to pay by the day. They may buy life insurance as a service. Who knows, right? But on the demand side, we certainly could see more innovation. But so far, as I said, right, you haven't really seen any major companies that have come in and technology companies, at least, that have come in and really disrupt the insurance sector in a very significant way. And I think it really goes to show that the offline agency, the personal touch model in Asia, is still very entrenched.
All right. Thank you, Ben. Thank you for your comments. This is another question that I want to ask Gordon and Nick. Is about ESG. What kind of key ESG risks do you think faced by insurance companies, and how insurance companies can integrate ESG concepts into the business strategy? Maybe we'll start with you, Gordon, first.
Yeah, thanks, Wilfred. Great question. At AXA, we view ourselves as a leader in this space because we chair and we're the founding member of the Net Zero Insurance Alliance. So you need to be able to walk the talk if you really want to do this. Our climate strategy on the investment side aligns with the Paris Agreement. So we've capped the warming potential in all of our investments. We will invest over the next 3 years 25 billion euros in green investments. But one of the most important things, in addition to reducing our related carbon footprint, is really the transition from the old economy to the new economy and new energies, etc. So we will invest 200 million euros in transition bonds and work with those companies. You have climate leaders, climate laggards, transition leaders, transition laggards. But if we accompany with you in this journey and you're not going to do it, you keep procrastinating, then we will divest. So kind of 3 strikes and you're out kind of thing. The other thing we have done is we've set up a climate school, which has been highly successful because this is for our employees, first of all. So every employee in AXA, not everyone's taken it yet, but our rates are very high in Asia, to really understand what climate change is, first of all, what climate risks are, and what AXA can do about them. So we have that. We actually allow other companies, not just insurance companies, but other companies use part of this climate school because we think it's for the greater good. As an insurer, clearly, say in auto insurance, we can do a lot there. We can charge by mile traveled rather than just one premium. So if you travel less, you have less of a premium. So it encourages you to travel less. In terms of spare parts, we can have a better premium for people who we source used parts, etc. So there's many things in different areas of insurance that we can do in addition to the green investment options that I spoke about. But I think in ESG, the thing that's quite often missed is the S. People always talk about the E, and for me, the S, and Nick mentioned it, inclusivity, emerging customers, etc., is very important. Correct DEI strategies are very important. And I mentioned at the beginning of this broadcast that mental health for me is a shadow pandemic, and we really need to have to do something about this. This costs the global economy. This costs us business leaders, US dollar 1 trillion each year in lost productivity. Only 10% of that's through absenteeism. 90% of that is through presenteeism, where people show up but they don't actually work. And if you invest in quality EAPs, you get a 4-to-1 return on your investment for mental health. So we're working with Columbia University, with Ethisphere, who do indexes, and with One Mind that I mentioned earlier, which is one of the largest global NGOs in mental health space, to really develop an index for companies to rate themselves, how good they are, what best practice, what good looks like, and how are they against that. And then, of course, you can have best practices, you can get advice and what to do. And we think by making mental health visible, it will really make a difference. And it goes back to that shared value concept of, taking a big social issue like mental health, but putting it into the core strategy of companies to make a difference. So I think the S part is often overlooked. Although I think some people say S has a capital S in ESG in Asia. So I think in some parts of Asia, we're doing better than other parts of the world.
Great. Nick?
Gordon covered quite a few of the points. Unlike AXA, we're not a P&C company, so we're not exposed to some of the risks that a general insurer would be exposed to. ESG has to be central and has been central to the strategy of many responsible insurers. Maybe let me say a few things about each of the E, S, and the G, starting with G. Governance is an important part. In many markets, it was companies like Prudential or other European companies that have started the sector. And in doing so, we brought a lot of discipline, a lot of rigor to the way business is done, to the way we conduct ourselves, to the way we understand and price risk, and has helped, if you like, the creation of a more disciplined market. That's just one example of how we and others like us have helped the establishment of the market. On the social side, a lot of our emphasis goes into financial education. The question came earlier, why hasn't there been a paradigm shift in the model? One of the biggest constraints is financial education. And we see that even when we try and sell products directly, very simple products, 2 or 3 clicks, and often customers will stop after the first or the second because they don't feel confident to proceed. Financial education is very low. So one of the initiatives that Prudential under its foundation has driven for many years is financial education for school children in schools through our Prudence Foundation 𝗙ihe program. So we're looking to working with a number of other partners to improve education at the grassroots, if you like. And in a number of countries, we're now training teachers to deliver the curriculum in schools. So a lot of effort is going there. Part of the S, both Gordon and I have touched on it. It's about making sure that there is financial inclusion, that we do provide the type of products that are affordable for all budgets. The fact that as I referenced earlier, we can have coverage for as little as 20 cents per month just wasn't something that the industry did or we did a few years back. Now we're able to provide, as I said, to bring under the insurance umbrella people that perhaps in the past couldn't buy the fuller sized premium products that we and others were offering. We are also targeting SMEs. I agreed with Gordon. Group insurance is another important form of protecting at least employees under group schemes, but small and medium-sized enterprises have never really been catered for. Technology makes it possible to offer contracts in a way that are viable for insurers and also useful for the SMEs. Other areas where we're working on the social side is, again, maybe spurred on by the pandemic. We've removed sort of COVID exclusion clauses. So we didn't have that in many of our markets, but in the 1 or 2 that we had them, we've removed them. And also we're trying to construct cover now for the modern definition of family, and trying to work with regulators to ensure that the regimes that they have in place allow that. For example, same-sex families or families that are created when the couple is not married. So again, trying to modernize the coverage and the offering. On the environment side, as Gordon has said, we all have a big role to play. We all run big balance sheets. I referenced earlier $258 billion that we manage on behalf of our clients. We have an opportunity to influence the climate agenda, and we've set ourselves some very public targets in terms of how we will achieve that, both in the near term and the long term. And we see ourselves as playing a key role alongside others in our sector in helping many of the sort of dirty companies transition to a greener way of producing and selling energy. So we a lot of emphasis, and if you pick up our ESG report, you'll see many examples of the type of work that we're doing across each of the 3 letters.
Great. Thank you, Nick. I know we're getting close to the end of the session. So why don't I ask this question, and everybody, you can on the panel, feel free to just say whatever jump on top of your head, right? If there's one thing that you're very looking forward from your respective regard, what is that one thing? Maybe we start with Michelle first.
Yeah. I think as suggested by slogans of many insurance company to make this world better and the people living a more healthier way. I observed some models previously in China, particularly for the elderly in China. So they are provided with a lot of services by insurance company, helping the situation currently faced by the one-child policy. There are some very high-end elderly communities currently built by insurers in China, and it's really amazing to see a team of graceful ladies aged 80 on average to learn and perform ballet on the stage, and the old gentlemen to form a musical band in the elderly communities, as they didn't have a chance when they were young to fulfill their dreams. So I think a lot of things insurance company can do to utilize their long duration assets and funds to help this society to become better.
Great. Ben?
Yeah, look, I'm actually very quick. I'm just looking forward to traveling. I really enjoy, visiting Peru's operations in Indonesia, Thailand. Gordon, with yourself, I really enjoy catching up with you as well. So I'm just looking forward to enjoying traveling again and able to see companies in person.
Great. Nick?
We look forward to welcoming you, Ben, and travel has started in Asia. In the last 3 weeks, I've been able to visit a few markets. Look, for me, it's what I said earlier. It's all about financial education and financial inclusion. Anything that the industry can do, working with authorities, working with non-profit organizations to accelerate that, can only be a good thing. As the largest insurer, one of the largest insurers in Asia, I'm embarrassed to say that through COVID, we only paid 100,000 claims, 17,000 death claims, and the average claim size for death was $15,000. It just shows the level of underprotection, and even those that are protected, how little cover they're buying, and that just doesn't seem right, and we need to help Asians be more protected.
Great. Gordon?
Well, at AXA, our kind of motto or logo is "Know You Can," and it's actually been quite difficult over the last couple of years to do that, because we always talk about being the architect of your own future, health-wise or financial-wise. So I'm looking forward, similar to everyone else, to be able to travel, to be able to do and be all we can be, because, you can, and we have the responsibility to do that. And things are opening up now, and now we can get back to living our life the way we want it.
Great. Fingers crossed. We all look forward to that. Again, thank you all the great panelists today for sharing your thoughts. And I know some great words too. Emma, Pulse, I think these are good and new friends to me. And I'm sure the next session is when we talk about how the technology meets insurance and unicorns is going to be another interesting session to touch on a lot of the outstanding questions that we didn't get to answer in this session. I think it will be answered in the next session. So again, thank you everyone for your joining. Again, my appreciation to the great panelists that I have today. Thank you very much. And back to the arranger. Thank you.
Thank you. That was a very insightful panel. Now we are delighted to invite our second panel to further discuss the future development of the insurance industry. The topic for the second panel is the rise of new unicorns when technology meets insurance. COVID-19 presents a chance for reflection and revolution. Having accelerated reforms in such short period of time, the pandemic has been a key driver of fintech development along with the entire insurance value chain. The insurance industry is facing the most profound disruptions in decades. AI, blockchain, data analytics, and other emerging technologies are enabling many startups to enter the market. How will the traditional insurers embrace this new technology and grow together with these startups? What areas will be the most promising for the insurtech? How will technology reshape the insurance industry in Asia? Today, we have invited representatives from innovative insurance companies to share their view on insurtech. Now, may we invite the moderator, 𝗙cie𝗹𝗹𝟐, co-head of sales and marketing from HKEX, and our panelist, Charles Han, CEO and Executive Director from Blue Insurance Limited, 𝗙𝗴𝗲𝗄, Chief Commercial Officer from 𝗙𝗲𝗲 Life Insurance Company Limited, Jonathan Larson, Chief Innovation Officer from Ping An Group, Wayne Xu, President of 𝗙𝗲𝗄 International and CEO of 𝗙𝗲𝗄 Insure. Christina, over to you. Thank you.
Thank you, Maggie. Good afternoon. Very happy to be here and very privileged to have all the panelists with me this afternoon. So maybe as a starter, I would like to invite all the panelists to give a little bit introduction about your company as well as yourself. Starting from Charles, CEO and Executive Director of Blue.
Sure. Well, first of all, thank you for having me here today. Really a quick intro on Blue. Blue was launched in September 2018 as Hong Kong's first digital life insurer. We're a joint venture between Hillhouse Capital and Tencent, which enable us to really leverage on the expertise of this two industry giants in order to offer a pioneering insurtech experience to our customers. Our mission is to disrupt the insurance market by addressing market pain points and also offering the best digital experience to our customers. Speaking of Blue, I just want to make sure that I think people appreciate why we actually name ourselves Blue. Our name is actually not just a color. It represents the four very important pillars of our principles. Firstly, blue ocean strategies. We're not interested in the red ocean. We believe the red ocean is too crowded. We aim to create and attract new markets by offering simple and open solutions. Secondly, blue sky thinking. We embrace innovations and believe sky is the limit. We constantly look to really unlock new possibilities. Thirdly, blueprint. We empower our customers and really help them to draw out their life protection blueprints. And lastly, I think it's becoming very popular these days, the ESG stuff. It's about Blue Earth. We care about sustainability and really our Mother Earth. Our motto is live easy. We're here to help people live easy by providing simple, flexible, and valuable insurance solutions. We offer a comprehensive product suite right now that includes over 16 products covering life, medical, critical illness, personal accident, savings, and also microinsurance as well. As a digital player, certainly advanced technologies and data analytics are the backbones of our business. Overall, we use all these technologies such as AI, cloud, I mentioned about data analytics for many aspects of our business, starting from product design to securities and also data privacy. Again, Blue is here to help people live easy.
Thank you, Charles. Let's go to 𝗙𝗴𝗲𝗄, Chief Commercial Officer of 𝗙𝗲𝗲, please.
Thank you, Christina. Nice to meet you and everyone virtually today. Wish you all safe and healthy. So 𝗙𝗲𝗲 is the first company to get the virtual insurance license in Hong Kong. We are in the space of life insurance, and our focus is medical and health insurance, together with a bit of life and critical illness product, but our key focus is health. So the business we do is very straightforward. We create and then sell insurance to customers online, both individual customers and corporate customers. Of course, we let our customers to do claims and only policy servicing online too. We also use the technology we developed to expand into healthcare service, like setting up our own medical clinic, connecting with hospitals. So we did our Series B1 fundraising last year, so our investors now include Sun Life and Mitsui. I'm excited to join the panel today and look forward to the discussion. Thank you.
Thank you, Gabriel. We're next, Jonathan Larson, Chief Innovation Officer of Ping An Group. Actually, I believe a lot of the industry participants are very aware of the innovativeness of Ping An, so we will not be surprised to see you here.
Well, thank you very much, Christina, for inviting both me and Ping An to be represented here today. I guess that for many people listening to this call, Ping An will be a pretty familiar name, but maybe I can just say a couple of comments. I think for the first thing to say is we're overwhelmingly a China-based financial institution, technology, and health company. We're a 34-year-old company now, I think coming up to our 34th birthday. We're an entrepreneur, founded and run company. So Peter Ma, who's the current chairman, founded the company back in 1988. And we have a very wide range of large-scale financial businesses, including a leading life insurance platform in China, the largest private health insurance platform in China, the largest P&C player, and a wide range of other insurance platforms. Ping An Bank has become quite a sizable entity as well. I think these days we do more credit card volume than Citigroup does globally in each quarter, and the same with respect to what American Express does for consumers. We've built a range of health businesses over recent years, and they include the Ping An Good Doctor, which of course is listed on the Hong Kong Stock Exchange, which by some measures is the largest telemedicine platform in the world. We have a wide range of other internet businesses that have been built. And I think just one thing to say about Ping An is we really try to apply technology to everything we do. I think as a company going back about 12 or so years, Ping An really decided to become a technology-first company, moved all of its business over a 5 or 6 year period, everything that could possibly be moved to our own private cloud environment. And we've tried to apply technology to both our existing businesses through re-engineering and application of analytics. I guess we'll talk about some of those later on. But we've also been, I think, successful and somewhat unique amongst big, let's call us a traditional financial institution, although I don't think we are traditional, somewhat unique amongst big financial institutions globally in being able to create new generation technology-enabled businesses repeatedly at scale.
Thank you, Jonathan. Last but not the least, let's welcome Wen Xu, President of 𝗙𝗹𝗋 International and CEO of 𝗙𝗹𝗋 Insure.
Thank you, Christina. It's really my honor to be able to share with everyone here. And 𝗙𝗋𝗋 International is a quite young company, so we were formed in the end of 2017, and we are the subsidiary of 𝗙𝗋𝗋 Online, which is listed on Hong Kong Exchange in September 2017. So that's actually after the listing, we started to think about international strategy and formed the company in Hong Kong. And right now, our business is basically focused on two areas. Area one, we have the virtual bank license. We also have the fast track life insurance license in Hong Kong. And actually, we are the only one who has both the so-called virtual bank and virtual life insurance license. And we are running business on the unified platform. We call that 𝗙𝗋𝗋. Actually, 𝗙𝗋𝗋 is on one hand, it's a Latin abbreviation of 𝗙𝗋. On the other hand, that's from Z to A. That's the reverse order of alphabet, which means we want to just think everything from a different angle and want to do everything from from end to beginning. So that's the part A of our business, and also we have a part B, which is consistent with what we have been offering domestically. So we have our technology platforms, and we are offering technology platform to the other insurance players as well as internet players, so that they can be well prepared for the digital transformation. And we also have been making progress in Japan, Southeast Asia, as well as Europe in past several years. If you looking back in the 4 years development, most of the time is covered by pandemic, but the growth in this past 4 years was tremendous. So our ZA Bank platform has been launched only 2 years ago. And right now, we are the biggest virtual bank in Hong Kong by number of users, by the deposit, by the loan amount. And we are also making connection between the insurer and the bank. So we are the first one who are launching the bank insurance between a virtual insurer and a virtual bank. And on the technology side, the growth was very continuous. So in the past 4 years, our year-over-year growth rate is more than 100%, and we have seen huge demand from the region that they want to have a better equipped with the technology so that they can embrace the future with better digital experience. Those are the things we have been doing, and we are pretty optimistic about the post-pandemic situation. We have seen all the business moments, and the consumers are getting more and more active. And there are a lot of things we can share in the later part of this session.
Thank you, Wayne. I guess, by now we can all see how passionate our panelists are about their own business. So now without further ado, let's go to my first question. Apparently, digitalization and automation have become the key words for a pretty old industry like in insurance, right? So we're seeing a lot of the younger generations appearing today, sharing with us all these transformation that is going on. But in the meantime, we also understand that the so-called more traditional insurance players are also investing very heavily in digitalization as well as a lot of the transformative initiatives. So I just want to ask maybe Jonathan and then Wayne in terms of where do you guys think are the most likely sort of breakthroughs with all these technology advancements, right? Are there going to be any disruptions to the industry, or new business models, or particular changes that you see are going to be very transformative to this industry? Starting from Jonathan, please.
Well, thank you, Christina. I think very central question to what we're talking about today, and as I mentioned, Ping An sees itself very much as a technology-driven company, and we try to apply technology to everything we do to create better outcomes for our customers and better outcomes for our shareholders. I think I mentioned that one of the key enablers for Ping An going back almost a decade was migrating all of its legacy platforms to cloud. That's proven to be an extraordinarily powerful enabler for Ping An. It means that we can build microservices in a consistent way, and the components that get created anytime we build a piece of technology really can be reused anywhere else in the group pretty seamlessly. So that's I think sort of a bedrock for us, and it's served us extremely well and will continue to serve us as we evolve our sort of cloud native technology on of course our own private cloud in the China context. I think Ping An has sort of tried to apply technology in a number of ways in a number of areas. I think firstly, Ping An tried to take legacy processes that were fundamental to the customer experience and fundamental to the economics of the businesses we're in. So a couple of examples, auto claims. We happen to be the largest car insurer in the world. So at any moment in time, we have just under 60 million cars insured through our policies. We generate about 15 million claims a year. So handling claims effectively is really important to us. So I think probably some people would be aware that we've pioneered the concept of visual claims analytics. So we have a mobile phone app that allows you to scan the damage, if it's external damage, if you damage your car. And we have an AI engine that can real-time identify the part, identify the car, decide whether the part needs to be replaced or can be repaired, and then prices the cost of parts and labor. And we're using that every day in our own business. We're providing that as a service to quite a number of other insurers. I think over 40 insurers in China itself. And it's an example of an application of technology in a very complicated, manually intensive area of auto insurance, and most importantly, a way of truncating a customer process, leaving customers happy and in control when they choose to receive a real-time instant settlement. But even when they don't, it substantially reduces the amount of manual intervention and paperwork or follow-up associated with an auto claim with the relevant parties that are involved. So that's one. I think another area in auto insurance was Ping An has been a pioneer in telematics, so using the ability to track driver behavior using mobile phone technology as a way of identifying driver risk. We have an opt-in program. It's available to customers and non-customers. I think the way Ping An's done it, it's pretty innovative. It forms just one element of a much bigger online mobile app-driven suite of driver services. But this one allows us to assess driver risk. It allows drivers themselves to improve their driving performance. Ultimately, it reduces the risk and the actual incidence of accidents, and it allows us to price to risk as well. So it's a very powerful enabler, and I believe we have the largest telematics platform in the world today. Other areas would be life insurance. We believe that life insurance still requires human involvement for the most part. There are, of course, some simple life products that can be sold very effectively online, but to sell more complex products, it really requires a consultative and educational process. So then the challenge is not how do we displace expert sales counselors. The question is, how do we use technology to enhance what they do, make them more effective, allow them to interact with customers more effectively? So we've built a platform over quite a number of years that supports and digitizes everything our agents do in supporting customers. And we can get into some detail of that, but I don't think we have time now. Lastly, I mentioned in my quick introduction that Ping An has been successful in building next generation platforms. Good Doctor would be a perfect example. Why did we get into telemedicine in the first place? Well, if you're a private health insurer in China, you're addressing today about 7% of the market. About 7% of health costs in China are paid for through private insurance. That means that there's 93% of the market that we're not addressing. While that 7% is growing and will continue to grow, what Ping An was looking for was one way of reaching far beyond its own existing customer base to be able to provide a platform that would enhance the availability of primary care services in China, which today still are largely provided on a centralized basis through public hospitals. And so we saw this window of opportunity, and I think have created a very powerful platform from scratch. And I think that we're just at the beginning of seeing the potential of that platform, both as a platform in itself to provide primary care within the China health system, but secondly, the ways in which it can interact with our insurance businesses and be able to provide real-world services as adjuncts to insurance coverage and financial products more generally. So I hope that gives a bit of a flavor. Of course, there are many, many areas where we're applying artificial intelligence, decision science more generally, digitizing workflows, in addition to the examples that I mentioned.
Yeah, thank you, Jonathan, for the very comprehensive analysis and sharing. But I also want to, ask Wayne in particular, like, 𝗙𝗹𝗍 has been trying to, I don't know, challenge the the incumbent, or, at least to adopt some, new technologies to also establish your status, right, in this market. So what are the areas that you are going to focus on so that you can achieve a differentiated sort of a positioning?
Sure. So as Jonathan just shared, well, actually technology can change different perspective of insurance, and from pricing to servicing, and from product design to user targeting. So a lot of things we can leverage technology. But if there's only one thing I need to emphasize on, I would say embedded insurance. So the concept is quite straightforward. Insurance is no longer like the sales journey by itself in a siloed environment. It has to be embedded into an environment where you can meet the right people and provide the right protection to them, just within the right scenario. So it's like the best formation, the ideal formation of insurance without a certain formation. So technology plays a very important role in providing this embedded insurance. And for example, 𝗙𝗹𝗍 had built the joint venture with Grab in Southeast Asia. The platform is called 𝗙𝗹𝗍 Insure. So that based on this platform, we will be able to serve the users or just within that ecosystem. So we will be able to underwrite more than 200 million policies since launch. So it has been a large number, and that's not the most impressive part of that. So a good portion of the policy is based on real-time pricing and responsive underwriting. So that can't be done by traditional infrastructure. And so this is only one example. We have done a very similar concept in Hong Kong as well. So last year, as a broker, we cooperate with Hong Kong International Airport, so that within that ecosystem, we will be able to provide the flight delay policies to the users when they are in need. So this is a small, well, last year is not the best time for flight delay insurance. For the traveler, is quite limited, but it's a very good proof of concept. And we have seen a lot of these opportunities has been emerging in Hong Kong, in the area. And so our platform, as I just mentioned, with Grab, the platform we have used called Fusion, is just ready to make the connection so that the tailor-made product will be very easy to offer to end customers. And the end-to-end experience will be just purely digital. And another perspective about life insurance is mainly about how to equip the traditional sales force with a digital enhancement. So last year we signed a strategic cooperation agreement with a well-respected AI group, and to be the technology provider to stay with them for the digital transformation. And so we have seen a lot of opportunities from scheduling appointment to go through all the underwriting, go through all the Q&A session, and to the issuing policy, to the policy admin. There's a lot of things can be further optimized by digital enhancement. And also, just several weeks ago, 𝗙𝗹 Bank announced a cooperation with ��𝗴𝗲, a 190-year-old insurer from Italy, to provide comprehensive products on the purely digital bank system, 𝗙𝗹 Bank. This is quite a breakthrough. So before that, there's no such business model in Hong Kong market. So, and we are introducing a lot of concept, which is widely accepted on internet platform already, so that user can be more seamlessly connected with their agent, so their questions can be answered in a more timely manner, and everything is trackable. And so there's no more confusion about the whole process or the product. So, well, these are the areas we are looking huge opportunity lies in, and the technology definitely played a very important role in that. So, without technology, all these different parts won't be able to be put together, and this API-based connection is quite crucial, not just for the scenario I just mentioned. I think that's kind of the standard configuration for the future business. So every scenario, every insurance company should be ready to embrace this API enhanced business model.
Thank you, Wayne, for your sharing. Well, Charles, we heard you mentioning that sky is the limit, right? So what kind of technology could be, utilized to equip you to reach the sky? Would you mind, sharing a few thoughts with us?
Well, as I mentioned, we utilize a lot of the ABCD technology, for example, as financial service provider to use Tencent Cloud. We are the first one. We are the first one to enable FPS in Hong Kong for our go and buy journey. We're also the first one who actually enable the government on smart capabilities. So our goal is to utilize technologies in the right way, I think, to really enhance the customer experience. Again, I think those are just a few examples of how we actually adopt technologies in an appropriate way to actually enhance the customer experience.
Okay, let's go to Gabriel at Bowtie. We understand your concern about health improvement using health insurance. So do envision the technological advancement or applications could significantly change that, given the complications of different health issues that are prevalent in this world.
Yeah, sure. I think the future is pretty promising. First, I think what Bowtie is doing right now is quite different from other traditional insurance company, as we actually spend a lot of the time to skip the intermediaries. So then we enjoy the advantage to create insurance product that customers really want, not distorted by agents, brokers, or any intermediaries with a different commercial agenda. To me, this is more like Netflix. I know today might not be the best day to talk about Netflix, but the business model of Netflix is to skip all the movie distributors and directly ask what do you want to watch and then make it for you. This is the fundamental proposition that Bowtie believes in. And the story we have been telling the market is that actually before us or before CA and Blue, people in Hong Kong cannot find pure protection insurance, pure medical insurance, because the agents, the intermediaries want to sell them a different product with investment and saving embedded to it. So I can understand that because it gives a bigger ticket size to the intermediaries, but that's not customer want. So this is the focus that Bowtie will invest in, and we will try our best to use technology to reduce the cost. I think right now this part is pretty promising. We're still on track to, consistently, sustainably, hopefully perpetually be cheaper than other insurance company. And we haven't increased our price for health insurance for, consecutively 3 years. And that's the reason, because we use technology to automate a lot of the policy servicing and claims. Right now, we're receiving a lot of medical claims from, over 60,000 customers we are serving in Hong Kong, but we are still comfortably operating with just less than 100 staff. I think this is the ratio that we want to target, and we will continue to, work on the technology to support this kind of ratio. And lastly, one of the things that I mentioned earlier in the introduction is that Bowtie also spare a little bit of resources, a bit of our time to operate our own medical business by setting up our own clinic or directly connect with the hospital. I think this is the key differentiator that we are seeing. Of course, I know Jonathan from Ping An, you guys are way more advanced. So we chose to start small by running our own clinic because we see a lot of challenge to actually integrate with the whole, healthcare service provider network in Hong Kong. There are a lot of legacy systems. There are a lot of data sharing, restrictions. So in order to crack that, I think the easiest part is we actually running our own clinic. So right now, if you go to Wanchai, you see a clinic operated by Bowtie. And if you happen to be a Bowtie customer, you can just walk in the clinic, log in your Bowtie account, and then you can enjoy whatever service you're entitled to. And you can, do a body check there and receive digital, medical data stored electronically for you. And even if you're seeing a Chinese doctor, which considered a little bit more traditional, the Chinese doctor can actually read out your numbers, read out your biometrics, and then perform the consultation based on those scientific numbers rather than, observations. So this is the kind of health insurance differentiation we are trying to develop and trying to create.
That certainly sounds very convenient and creative. Now back to Jonathan. You just heard a lot of these newcomers to the insurance industry trying to explore with a lot of new ideas. And apparently you're also trying to promote technology transformation internally within Ping An. But given Ping An is a large client base, a large sales force, and also very large-scale infrastructure, I believe that all these transformations internal would be quite challenging. So can you maybe share with us, what are the key challenges to push forward all these changes internally? Do you see more challenges from economic side or technology side or purely the human side of things?
Well, thank you. We're indeed a big place. So we have about 220 million financial clients in the group, and we have about 650 million internet users across all of our different technology platforms. So indeed, we're a large-scale organization. Inevitably, in a big organization, we've got a big headcount base, a large agency base, and therefore driving change is always a challenge. But I think it's a challenge that Ping An really relishes and rises to. On the tech side, and I guess we can talk about maybe some organizational matters, talent, and how we kind of try to create a culture of entrepreneurship in the company. Let me start with talent of the three. I think, first of all, it's very important if you're going to be a tech leader to be a magnet for top talent. And I think the way Ping An has tried to do that over the last dozen or so years is through a combination of international recruiting and onshore recruiting in China. To give some examples, we place a lot of emphasis on attracting people with global experience in global top-tier tech companies, as well as local tech companies in China. So we've found that, anybody would know that, if you go to the computer science faculty of any top university in the States, you're going to find a lot of Chinese graduates working on PhDs and master's degrees, which is a great thing, of course. And a lot of those guys or ladies end up working for top-tier tech companies in the States. There's frequently a point at which those people are very interested to come back and work for a very high-quality company like Ping An in China. We even have a center in Palo Alto as a sort of bridge where we've got an excellent lady who's has a PhD in AI from Carnegie Mellon, but spent a lot of time at Google. But she's created a whole center for us of talent, which most of it doesn't have to be Chinese talent, by the way, but a lot of it happens to be. And many of those people are people that probably will come back to China in the longer term, but want to stay in the States in the short term, and it creates a good hybrid model. But we've recruited a lot of people from different tech companies that really have formed the nucleus of our AI and, let's call it, broader advanced tech team. We've done the same thing in China. I think at this stage we have well over 30,000 R&D engineers and a couple of thousand people that I think we could safely call data scientists within the company. So it's a massive resource base. And obviously those people are working on many, many fronts across the company. And I think that, people, of course, graduates have a choice. And I think it can be very attractive to go to startups or to pure tech companies. At Ping An, I think the value proposition we offer is the ability to really take on scenarios and use cases in a real, very large scale business and really make an impact using technology. And I think people find that exciting and very satisfying, and it shows a lot of results. Organizationally, I think we've been through different models. So when we did the cloud migration for the company, we had to centralize a lot of technology just to take control. In the last 7-8 years, we've been aggressively decentralizing, and we're trying to organize our business units so they're self-sufficient as much as possible with tech resources, and as much as possible look like, or at least start to look like, an internet company where we have DevOps resources on a very highly decentralized basis, and modularity in our architecture such that we can make simultaneous changes pretty much real time. So that's very much the direction we're heading in. I think we're doing reasonably well. We've got a long way to go on that journey, of course. And I think the third thing I'd say is that, as I mentioned, Ping An's got a lot of experience in starting new businesses. And that's usually something we do when we think that an idea or a technology or an approach is going to be better as a standalone venture, as opposed to something that will struggle to survive or may not mesh with an existing legacy business. And in that case, I think Ping An has a really interesting model of really creating the conditions of a real startup. And as probably people that have looked at our company would know, we either bring in management or take Ping An managers that can be the leaders. We give them and frequently require them to use their own money to buy equity in the company that they're running. We usually bring in outside investors, which creates a whole different kind of accountability. We make the company go through funding rounds in the external market in addition to providing capital ourselves. And those companies are really run as internet businesses. No one's going to be flying business class, that I can promise you. Office space is constrained. It really looks and feels and is like a startup. And I think that Ping An is just one of the very few companies in the traditional financial sector that's been able to get that that sort of dual culture to work, within its startup businesses and to be successful in bringing some of those businesses to scale. So we certainly don't think we have all the answers, by the way, but we do believe that technology is fundamental to our future. Attracting talent and mobilizing that talent effectively is going to be key to our success.
Yeah, that certainly sounds like a very serious, ongoing, endeavor. But it sounds like that you're heading in the right direction. I might actually want to go to Charles for a moment. You heard that Jonathan mentioned the power of their agents, or the connection between their agents and the technology, right? The agent network. So as a more like a digital insurer and insurtech that is emerging, how do you enhance customer satisfaction and engagement, especially with regards to the selling or the servicing of a more complex product?
Sure. Well, I do believe that I think the customer engagement and satisfaction can be enhanced via 3 different means. The first one is really about product innovation. Second one is about marketing innovation. The third one is about customer experience innovation. Let me perhaps just spend a little bit of time, go through each of those points accordingly. On product innovation, just give you a few examples of what we have done in blue. Just looking at the rapidly changing market environment, we have designed quite a few new products trying to address those market pain points. Give you an example. Term life products. The market pain point is insurance is really rigid. Once you bought it, you cannot change it. Our term life products is first in the market. During the terms of the product, you can actually change the payment period, the payment terms, including the sum assured, first in the market, really in accordance to the changing needs of the customer. Our savings product, the market pain point is normally you get really high surrender charges before maturity. So normally the product doesn't break even until 4 or 5 years later. Our product is with a attractive guarantee return. At the same time, there's no penalty charges for surrender. So people can actually surrender at any time without any pity. The third innovations that we have as an example on products is about our pharmacy product. Again, market pain point. There's no insurance product currently in the market cover pharmacies. We are the first one in the market covering pharmacy expenses, including, for example, painkillers and even face masks. So those are the examples of product innovations. I think it would drive a lot of customer engagement and also satisfactions. The second part is about marketing innovation. Marketing innovation, I think, as an internet company, as an insurtech company, we leverage on social media extensively. We adopted an always-on marketing approach with really two main themes. Firstly, it's about the utilizing a culturally relevant content. We create a lot of fun and also engaging marketing contents without being really sales, without really being pushy in terms of sales. We focus on educating people about the merit of digital insurance, but not just about promoting our product. So there's a part about, I think different panelists has mentioned about this, there's a part about education. We do a lot of those education as well. To engage our customer, we did a lot of games as well. I think gamification is one of the very important kind of strategies that we actually have. I think we have seen a lot of success. I think the Blue Guru games attracted a lot of engagement, reactions from the public. We also utilize a lot of KOLs to really engage the customers. These are influencers that can help to raise our brand awareness, our product awareness as well. I think before you ask me about technology, right? Technology is not just about implementing it. It's also about how you actually utilize in an intelligent way. We use a lot of data analytics. We use data analytics to optimize our promotions, to optimize our messages to our customers, to optimize our user experience. I'll give an example. Just we have made over hundreds of enhancements on a call and buy journey based on our data analytics. And our main objective is to make sure that I think we create the best user experience for our customers. So I think these three areas, I think combining together the product innovation, the marketing innovation, the user experience innovation, is really the three major means to really enhance customer engagement and satisfaction.
Thank you, Charles. One interesting question that I have in mind is for Wayne, is that, we basically classify a lot of the insurtech models into DTC, where others are, providing SaaS to B, right? So between these two models, where do you see, they're going to evolve going forward, right? And also, which camp do you think that, ZA International really belongs to, and why have you, chosen that path?
Yep. I agree. Enterprise service to B and consumer service to C are two totally different business model. However, in ZhongAn International, we don't choose. We are doing both, and actually we are enjoying the benefit of doing both at the same time. So as I just mentioned, we have a two business line. The 2C business line is mainly focused on Hong Kong market. We have the integrated financial platform so that we have the bank, insure, and potentially invest all integrated in one platform. So the user can be just fulfilled on the unified platform. And to be part, we are focusing on international market. And we have seen a very strong connection point of two business model, which is a technology, the fundamental technology. We are sharing a lot of fundamental technology for two business models. So for example, the product line, the bank insurance platform I just mentioned to connect the ZA Bank and the ZA Insure is based on billing system, which is part of our standard product line from 𝗙𝗴𝗃. And also our 𝗙𝗴𝗍 is based on graphene, which is our mainstream product line from 𝗙𝗴𝗃 as well. So we benefit a lot from our technology advancement. So on the market, we will be able to be really moving forward in an agile way. Our system is highly customizable. And so we will be able to launch product in a very short period of time. And we will be able to customize our own marketing promotion. And most important of all, we will be able to do the back-end data analysis just on that system. So it's very important for a very competitive, crowded market in Hong Kong. So it's not like just like the marketing budget. It's like how well you can digest the data, how well you can fine-tuning for the marketing campaigns. So these are all supported by our technology platform. And if you look from the other side, the technology side, that was benefited also from our consumer business as well. Because we have been running this business with our own hands, so we know what are the real pain points. And as I just mentioned, this data analysis, it wasn't originally part of our core system, but as we are running this business, we know, well, this is a very, very important part of digital insure. We should be able to provide this functionality, not just for ourselves, but also for our customers. So we, last year, we officially launched X-Man. That's a data analysis platform, which can be seamlessly attached to our graphene system, to our partners as well. So that's a very good demo case how how the technologies are connecting both business model. And in the future, we believe these two business model will keep supporting each other and moving along in their own directions.
Yeah, that's really interesting, Wayne. Let's come back to Gabriel. Actually, health insurance has been probably the hardest the topic of insurtech lately. So we do see that there are aging problems and people are live longer, and the hospital sort of resources are also constrained to some extent. Apparently, so there are a lot of challenges, but also opportunities. So what are the areas that insurtech can make a difference in this health insurance sector?
Thank you. This is an amazing question. I think the key here is that insurer cannot stay to be just a payer. So you cannot just be the one to pay the claims or be the one to finance the medical expenses. We have to take a step to use either technology to connect to hospitals and service provider, or you use data analytics as mentioned by Charles. You got to step up to be more than just a payer. You probably have to take a role to actively influence your customers on what healthcare service they would like to choose, be it for a cost reduction reason or for a better preventive care reason. I think this is the area that insurance companies should invest more to do. Last year, we welcome our new investor, Mitsui. Part of the reason behind is that actually Mitsui has a very big investment in HKEX, which is the largest hospital group in Asia. So we see the synergy that perhaps Bowtie can be a channel to influence the decision of our medical insurance customers to direct either more quality patients to private healthcare, or we change the way hospitals is positioned in the heart of customers. We, instead of positioning hospital as a place to cure you, to provide you surgery, we want our customer to see hospital as a place to undergo preventive care. They should do more body check. They should do whatever means to keep themselves healthy. One example we did in Hong Kong is that we worked closely with Gleneagles Hospital. We designed an insurance product just for this hospital. So on one hand, customers get 100% certainty because they receive full coverage if you go to Gleneagles Hospital to do a standard medical procedure. And on the other hand, our customers get every year free body check, dietitian, family doctor, all these preventive care services from the hospitals to keep you healthy. So you get a lower chance to claim your medical insurance. I see this kind of active interference by insurance company as one of the options for InsurTech future.
Right. But previously we say we better listen to the doctors. Now we better listen to the insurers. Okay. Well, in the interest of time, actually, I have one last question for each of the panelists here. But the questions are a little bit different for Jonathan and Wayne as representatives of listed companies on the exchange. The question is, given the recent valuation adjustments on technology growth stocks, the market seems increasingly focused on profitability over pure growth, right? So from your observation, how do insurtech companies balance between spending now and to invest now to grow and achieve profitability? And the other question, I think, is a question from the audience. I think maybe Gabriel and Charles can answer a little bit. Like, given we haven't really witnessed a super disruptor in the insurance sector, I wonder what are the key challenges that we see when technology meets insurance. Okay, so 1 minute for each panelist.
Should I start?
Yeah, please.
Yeah, okay, well, great question. I think, first of all, we have a fair amount of exposure to the insurtech sector, both in terms of actual investments, but also investments that we look at around the world through the Ping An Global Voyager Fund, which I also run with our team in Hong Kong and the States. So look, I think we've seen a lot of exuberance around insurtechs. Many of those have gone to market. Many went to market with SPACs internationally in the States. And in almost all cases, the valuations have not held up in a good way. And I think, probably those companies went to market too quickly. And probably the unit economics of the businesses just weren't sufficiently clear. And I think probably some investors were treating, gross premiums as if they were SaaS revenues or something like that. I suspect that, we've now sort of got through that. And, I think it's really like any other business. If a company goes to market too soon and the business model is just not that clear and the path to sustainable, strong, positive unit economics is not clear, the market will just never treat the company kindly. So I think companies have to time their move to public markets well, and they need to have the fundamentals in place, and they need to be attuned to the rigors of public market scrutiny. It's just not an easy place to be, and the market sets very, very high standards and is very punishing if they perceive those standards aren't being reached. So I think it's kind of a salutary lesson over the last couple of years in insurtech, and I hope will put the sector on a more solid foundation in future.
Thank you, Jonathan. Wayne, any thought?
It's a great question. And I would say in Zhonghua International, the key theme is still growth. But if we have to add some constraint to this growth, it is quality growth. So it's not a new concept, but we just put that in a more explicit way these days. So which means you need to run the business in a more calculated, more sustainable way. And to answer the question about how, I think finally we still need to get back to value creation. For our enterprise service business, it's mainly not just about reaching out to more customers. It's about sitting closely with your customers, building long-term relationship with them, and help their business successful. So that's a key for long-term achievements. And for the consumer-facing business, it's not only about providing more and more products to be more aggressive on user acquisition. It's about how to provide a differentiated products and a service, and how to educate them, how to engage with them in daily life, not just try to sell another financial products to them. So I would say if we can focus on the value creation, and finally the fundamentals still remain the same. And actually last year, Q4 of last year, we have finalized our Series A funding, and with respected investors like AIA and 𝗙𝗴𝗃, and so that's a recognition in the tough to our achievements in the tough situation, and we are pretty confident about the future. With the support of the investors, we will be able to move forward in a more planned and stable way.
Thanks, Wayne. What about the last question, Gabriel or Charles? Any thoughts you want to share?
Sure. Well, in terms of challenges when insurance meets technology, I can highlight three main challenges. The first one being, I think, is about the impressions of insurance and also the general public's understanding of insurance. I think in general, people are still scared about insurance. People are still doubtful about kind of whether they need insurance or not. I think the understanding of insurance is actually relatively low, I think, particularly in Hong Kong. I think that's the first challenge. The second challenge is really the consumer behavior. I would say that I think in general, Hong Kong, perhaps I think compared to other locations, is perhaps the digital penetration or the e-commerce adoption is still relatively low. I think if you compare to China, compared to other Southeast Asia countries, I think the e-business kind of volume and traffic is a lot higher. So that's kind of the second challenge. The third challenge is perhaps I think describing the older days and not a good reflection of kind of today or the trend that's going right now. Is the maturity of technology and talent. So I think a lot of people mentioned about talent. Talents are actually important. Particular, I think, for those kind of insurtech talent, digital talents in Hong Kong, it's actually pretty difficult to find. And also maturity of technology. I think before there's a lot of complexity in those journeys. I think creating a lot of challenges in terms of automating the whole thing or making the journey seamless. But I think those are actually being resolved over time. And also, I like to highlight that I think the kind of the digital adoption is also changing. I think you see the emerging of the millennials, the digital savvy young groups. I think that picture is actually changing. I do see that. I think going forward, I think the future of insurance will be driven by customers and also data, not by the insurance anymore. I think in the past used to be driven by the insurer. The insurers will perhaps dictate what kind of product is going to be sold in the market, that giving them more profitability, for example. So I think that picture is going to change. That's kind of the overarching theme in terms of, I think, the trend of insurance going forward. And also see that I think there are specifically, four likely trends as well. I think I do see that there's going to be increasing adoption of insurtech. I think not just for digital players, but also traditional players. There's an acceleration of those technology adoption. Also, as I mentioned, as technology become more mature, I would expect to see more new types of products. I think right now there's a lot of Me Too products in the market. Everybody has the same kind of products, right? It's really just put a different label on it. So there's going to be a lot more innovations, I think, going forward. I think, for example, usage-based insurance, a lot more personalized products. I mentioned about microinsurance, which we do. Blue does that as well. So we're going to be seeing a lot of more innovation on the product sides as well. And better customer experience going forward. I think as now we're utilizing more technology, collecting more data, insurer will be having a better understanding of the customer needs. They will be able to create more targeted or automated customer experience. And lastly,
Sorry, Charles.
I personally think
one last comment, please.
that there will be more of an integrated ecosystem really tied to customer needs. I think, meaning that the insurers and the digital companies will be working a lot more closely together.
Right. Gabriel, can I ask you for the one last comment?
Yeah, I would just be really quick. I'm actually pretty brutish about, technology disruption to insurance. It's just 3 years into business for Bowtie, and we're already seeing over 60,000 customers using us. And I heard from Wayne that there were actually over 300,000 customers using virtual bank. I feel like Hong Kong people are actually pretty, adopting technology of virtual banking, virtual insurance pretty good. And in our case, our customers are enjoying a very affordable insurance, double digits cheaper than the policy they can get from traditional insurance company, and they're using it. They love it. And we are looking at our customer base that I see the average age of our customer at their early 30s. So I'm actually pretty bullish about this, and I felt like it's just a matter of time. If you ask the same question 2-3 years later, probably you get a more convincing answer.
Thank you all for joining this session and for your very insightful sharing. Again, thanks for your time, and I really enjoyed this session. And for the audience, we will actually have another interesting session with a lot of listed insurance companies on Hong Kong Exchange to share with you their company journey and interesting stories. So stay tuned. Thank you. Back to you, Maggie.
Thank you.
Thank you.
Thank you.
Thank you for an engaging panel. Now it is our time for the virtual company presentation session. In this session, we would like to enhance investor relations by connecting investors with issuers. It serves as a highly effective medium for listed companies to showcase their recent business, not only to selected investors, but also to the public who are interested in the insurance sector. First, let me invite 𝗙𝗹𝗲𝗍𝗲, Chief Executive Officer of 𝗙cie Asia Pacific, to say a few words. Peter used to serve as Global Head of Financial Institutions Group and has a long-standing track record of advising global insurers across M&A and capital markets, such as AIG, AXA, Manulife, and MetLife. Without further ado, Peter, please.
Thank you. Thank you very much for that. And good afternoon, everybody. And thanks for having me here today. Really appreciate HKEX inviting us. And thank you also to the panelists. I've been listening to the previous panel with great interest. I think there were some excellent insights, not the least of which the one about the insurance industry not really being about selling product so much anymore, but about providing solutions for increasingly sophisticated customers. The event today, to me, highlights that the insurance industry is transforming at a very rapid pace. And obviously, that's been accelerated by the pandemic. You've got ecosystems, you've got evolving customer expectations, you've got tech disruption. And these are profound shifts, or driving profound shifts in the business models. Insurers are capitalizing on technology. They're finding new growth opportunities. They're increasing customer satisfaction. They're reducing costs, enhancing their underwriting, and expanding distribution. And digital distribution in particular is growing very, very rapidly. And I think we've heard that from some of the panelists. That is a trend that's never going to reverse. And it actually enables companies to build relationships with customers in entirely new ways. And we think that's extremely exciting. Partnerships with companies like Grab and GoTo are a great example of insurers becoming more and more relevant to consumer ecosystems. And this is also a trend where Asia is such a clear pioneer. In many countries across this region, buying insurance now is as easy as ordering a pizza online. And that's a very recent phenomenon. A report by Swiss Re, recent report, found that 2/3 of the respondents in their consumer surveys cited online features as a key criteria of whether they're going to purchase a product or not, and especially in life and health insurance. Of those people who purchased new insurance policies online in early 2021, 85% would do the same in the future. And I think that tells you a lot about where this industry is heading. So as the industry continues to transform, innovation and the ongoing evolution of business models are going to be key to driving marketing, customer loyalty, operational and financial performance. And of course, and we're all biased here, but staying ahead in Asia Pacific is going to be crucial to the overall growth for most global insurers. McKinsey's Global Insurance Outlook found that Asia's gross premiums have doubled since 2010. The share of overall global premiums is now 27%, and it's growing consistently. Health insurance in particular is seeing very strong growth, 8% compound growth between 2010 and 2021, and that's the highest globally. And the Asian life insurance market is projected to grow from 1.2 trillion, in 2019 to 1.5 trillion in 2023. That's according to global data, and it's supported obviously by an aging population and a middle class which is expected to pass 1 billion by 2030. So you've got some very powerful fundamentals here. You then look at insurtech investments, and we're seeing well in excess of 10 billion annually flowing into the Asian insurtech industry. So with all the headwinds in the global economy, all the issues that we have across the planet, the fundamentals for insurance growth in Asia Pacific are very strong. At Citi, we're fully focused on supporting our clients and partners across this sector. We've been in this sector for many years, and we're focused on leveraging the power and the reach of our global network as well as our industry expertise. And we've always taken a long-term view and a firm view of Asia. I'm proud to say that this year we're celebrating 120 years in the region. We're as dedicated as ever to supporting our clients across Asia, and we're very grateful for all the trust that they've placed in Citi over the years. This, of course, includes very much our insurance clients. In fact, insurance has been a global focus sector for Citi for many years, and as was said in the introduction, a sector for which I have special personal affection. In fact, our insurance client relationships are critical to Citi's renewed strategy. We announced last year that our aim was twofold: to be a preeminent banking partner for institutions with cross-border needs, and to be a global leader in wealth management. And insurance is critical on both fronts. Our decision to double down on our institutional client businesses is a natural extension of our strength and our ability to support clients in various sectors, and financial institutions, which is the business that I used to run globally, is a very important part of that, and insurance obviously is a very important part within that. So let me share some examples, and I do that with great pride for Citi. In Asia Pacific, we've raised a total of 9.7 billion in equity for our insurance clients since 2015, which is about 30% of the total amount. Globally, we raised over 36 billion for insurance clients, and we're also very proud to have participated in a broad spectrum of M&A deals, both local and cross-border. So insurance is a sector that we're very invested in. We're very bullish on insurance for all the reasons that were mentioned also by some of the panelists. And we think that there is immense potential that still has to be realized. It's driven by insurance penetration opportunities as the key factor, and to unlock the full potential of this, collaboration between all of us is going to be key. On that note, I'd like to thank the HKEX again for organizing this event. I think it's a fantastic event, and we're proud to be part of facilitating interactions between investors and market stakeholders and enhancing liquidity in the secondary market. So again, thank you all, and we appreciate being part of this event. Thank you.
Thank you, Peter, for his sharing on the landscape of Asian insurance and how Citi grows with the insurance industry. It is now the time for the company presentation. Today, we have gathered 5 listed insurance companies from international and China. First of all, allow me to introduce 𝗙𝗴𝗲 Online P&C Insurance Company Limited. 𝗙𝗴𝗲 Insurance is the first online P&C insurance company in China, and it listed on HKEX in September 2017. 𝗙𝗴𝗲 Insurance provides insurance products and solutions in 4 ecosystems to meet the customers' diversified protection needs in their internet life, as well as integrating technology into the entire insurance value chain. 𝗙𝗴𝗲 Insurance also productizes and exports the insurtech capabilities to domestic and overseas internet and insurance companies, facilitating digital transformation of the global insurance industry. Please welcome representative of ZhongAn Insurance, Lin Zhang, Head of Capital Markets and Investor Relations. Lin, please.
Good afternoon. I'm Head of Capital Markets and Investor Relations from ZhongAn. My name is Lin Zhang. I'm happy to have this opportunity to make exchanges with you. Thank you very much for your concern and support for ZhongAn. So I will start my presentation now. Please turn to page 3. We are the first internet insurance company in mainland China. We want to empower the finance business with technologies and provide insurance services with a caring hand. Since 2010, we have been facing pressure created by the pandemic, but we have still achieved very great results.
Next page, please. In 2021, our 𝗔𝗴𝗲 had reached a 20371 million for the first time, and in 2021 we continued to build a national brand building, and our 𝗔𝗴𝗲 contribution has reached 18%, which is a 5 percentage points over last year. Now, this is efficiency and revenue has been boosted by technology, and this 2021 was the first time when we had a combined ratio of 99.6%. Because of our investment and revenue, our net profit was 1.165 billion, which is an increase of 10.3%. And in that year, our number of ZA Bank customers also doubled to 500,000. And our revenue from technology export was 520 million at a 46% increase. In the mainland, we service long-term customers, and we also exported our technology to Europe and Asia and foster the digital reformation of the world in the insurance industry. And also, we also have a leading position in the online banking and insurtech in Hong Kong. And we have already, as I said, over 500,000 users. Next page. And in 2021, capturing the opportunities, we closely integrated the service, technology, and insurance to provide an all-value chain for our users. Page 6, please. And further, in the health ecosystem, we keep on enriching products and services to cover the whole life cycle of customers and deepen health inclusion. And this is a unique benefit and competitiveness of ours. Now, with the enriching of our products, we continue to explore the expand the health ecosystem to include elderly, female, teenagers, sub-health, and chronic diseases, etc. And we continue to identify the uniqueness in these different subsectors. And we also had included immunity and 30 others new products and new medicines. I mean, we also launched a high blood pressure and elderlies and other subsectors services. And we also included oncology screening as well as other health services in order to ensure that we would be included in the $1 million threshold. And we also increase it to a higher frequency and higher quality products. And we also serve better our enterprise customers. Now, due to our long-term effort in 2021, we had a 16% increase in health ecosystem GWP to reach 8.6 billion, of which the general items helped us get more customers to reach 18 million. That is a 30% increase over the same period last year. Next page, please. And in the digital lifestyle ecosystem, we grasped the opportunities to introduce new products for new scenarios. In 2021, the digital life cycle ecosystem had reached an 18% GWP growth to reach 7.2 billion. And as far as the e-commerce content 2.0 is concerned, we introduced new direct streaming, live streaming, and that had contributed over 20% of the insurance premiums. With our innovation, there had been multiple breakthroughs. As far as pet insurance is concerned, we have a 250% growth in GWP, and we are in the leading position in this subsegment. And phone screen cracks insurance GWP had realized a 65% increase in GWP, and we are also in a leading position. Next page, please. In 2021, we had serviced over 500 million customers, and with over 30 live streaming channels to provide various services. Our fans, number of followers, are exceeding 14 million, and in TikTok and other platforms, we had been ranked number 1. And these have helped us turn customers into long-term customers. We had reached paying users of 7.13 million, and we also conducted cross-sales in order to bring a full spectrum of protection to our customers in terms of cross-selling, from traditional items, including extending into pet insurance as well as other newer items. And our increase in GWP in this area, proprietary channels, exceeded 66%. And we had reached a premium per paying user at 506 RMB. That is a 20% increase. Now, while we be innovative, we are also creating more value for our customers. And our personal clinic policy renewal rate was at 82%. Our cross-selling rate on proprietary channels were at 33%. Now, technology business is also bearing fruit. Internally, it has enhanced our efficiency and optimized our user experience. And our internal technology has also shaped us into a more efficient customer as it relates to the various workflows of the insurance. And we had been serving over 600 customers, and we had also launched new internet safety products for the banks. And our insurance agency business had also experienced some breakthrough, and we had continuous breakthrough, and that had built the international brand of ZhongAn and enrich our platform. Next page, please. And we had built a full range channel, value channel. and we had a 34% increase in our strategic customers in last year, from modal products to the end-to-end core systems. And we separated our customers into 3 types, respectively potential customers, strategic customers, and high-value customers. Our network security and all that had helped us attract these customers. Our agency platform, as well as our intelligent marketing platform and visual backtracking system, cybersecurity and compliance and all that, had been able to help us build our potential customers base. And also our insurance core systems and brokerage core system and Graphene had helped us build 11 high-value customers. Next page, please. And in 2021, our revenue was at 520 million. That is a 42% increase. And the infrastructure series was at 12% contributing, and production series 52%, growth series at 35%. And with our product increase, our net loss has become smaller. In 2021, 𝗙𝗴𝗲 International had been working on international markets. And as far as exporting is concerned, we try to be the standard of digital transformation. We have been working with customers from Bangkok, Malaysia, Jakarta, Indonesia, Philippines, etc., and also to expanding into Europe. We focus on building digital platforms for our customers. For insurance companies, we had built an end-to-end platform which can help the customers to connect to various partners in the ecosystem. And in 2021, we worked with our Indonesian partners through Graphene to promote digital solutions and products. And we are also working with AIA in digital collaboration. We turned Graphene and Xmand into an AIA standard products and service, with Singapore being the first point of launch. And also with Nano, we also work with the top Thai life insurance company, Montan Life, to shorten the R&D cycle and speed to market. And also for overseas customers, we also provide various platforms and services to address their pain points. Through Fusion integrated insurance and financial solution, we try to address pain points of the travel industries and enhance interactivity and penetration. Next page, please. In Hong Kong, we continue to work on virtual banking with a one-stop digital financial service platform. We called it 𝗙𝗴𝗲. 𝗙𝗴𝗲 is one of the first virtual banks in Hong Kong. Within a matter of 2 years after opening, it had breakthrough and won the trust and recognition of the customers in a mere 2 years. With over 6% of the Hong Kong population, exceeding 500,000 people being 𝗙𝗴𝗲 customers. 𝗙𝗴𝗲 Car is a game card, has become the most popular card in Hong Kong, and we continue to enrich our consumer products and services matrix. That's because to open a new page of digital services for Hong Kong users, and towards the end of the year, we would be introducing balance transfer a new platform, a new product that allows for salary payments every 7 days. And we had also made important changes to our functionalities that can be closer to the needs of the customers. ZA Bank has also been approved as SFC Type 1 SFC license Type 1 company for investment, so that we can be prepared for the insurance experience of our customers. Being the first fintech company with an insurance and a virtual banking license in May, we had also, through our first APP, to launch the first digital APP, on which customers can get insurance products within a matter of minutes. And we had also signed a partnership with GA Insurance, so that on our APP we can launch multiple GRL products. And we, with the 2A brand ZA, and also through our 2B brands, we would be creating more value for our customers. We would continue to pay close attention to the development of the fintech development in Hong Kong, and also to contribute our efforts to build Hong Kong as an inclusive finance center. Page 14, please. Through this digital operation, we continue to optimize our cost. For the first time, had reached below 100%, which is 99.6%. That goes to say that our strategy is working on the long term, and it is releasing more and more profit. Page 15, please. In 2029, we had reached 203 million. That is our profit, and we also were introducing a lot of sub-segment profits. And our health had been keeping stable. We had a 16.4% increase to 7.6 billion, and the digital lifestyle premium had increased 15.8% to 7.7 billion. And consumer and finance, as well as auto, has been an important sector for us. And in 2021, the pandemic has got well under control, so our business has been recovering too. With financing with the finance segment, we have 107% increase. As far as the stable development of our business, we have a stringent control over our risk. We work with reinsurance companies, and that which is a 16% of our value has been reinsured. So with auto, based on the demand of our customers, the premium has come down a little bit, and however, we had increased it by 28.8%, the overall business. In 2021, because of a customer-based product strategy, we had reached our first, we have gone into our first blue. As far as net result is concerned, we had increased a lot of value-added services so as to build more value to our customers. And we also work on building the loyalty of our customers. And through our chain, our efficiency has been increased. The claim rate is 51, and all in all, we continue to launch low threshold and high protection products, so that we can introduce more value-added products, so that people can really benefit from their insurance. We were talking about 18.3% being the ratio of contribution. That's because of the increase in our new business. And also the e-commerce, say like our partnership with Taobao and Tmall, and there had been some price adjustments that had lowered our cost and enhanced our customer experience. Now, our risk management has also been working well to increase the value of our underwriting assets. That is because, and also with auto, we had been changing our rates, lowering our rates. The cost level has come down, and the claim ratio is 55.7. However, our cost has come down. Page 17, please. Now, regarding investment business, facing the domestic as well as international macro circumstances, our investment return continues to be stable. As of end of last year, we had a 30.7 billion of investment, and our investment return had a 22% increase. And in the future, we will continue to practice a prudent investment strategy, and also to to strengthen our risk management and our prognosis of profit.
Page 18, we continue to improve our balance sheet, and we have adequate capital against quality growth. Our total asset grew by 13.4%, total equity grew by 10%, core solvency ratio 472%. Page 19. Since establishment, 𝗙𝗴𝗲 has been adhering to long-term commitment with more new initiative to achieve quality growth. We realized profit for the first time in 2021. We quickly accumulate more and more users, and we will continue to maintain a high level of growth so as to have long-term development in our current markets, and we'll continue to perfect our product mix, and we will use technological advancements and innovation to create new products and services for our customers. So this is a very quick briefing on our company, and I will leave the time for Q&A. Thank you, Madam Zhang. We will now proceed to Q&A session. You can use the Q&A function key to raise questions. Let's invite the first question. You have sustained very good growth in terms of premium for the first quarter of this year. What are the main drivers? For the first 3 months this year, 5 billion renminbi premium, a growth of 10%. Compared to the industry average, we are more or less in line with that. This is driven by smart living and healthy living. So the momentum of growth is similar to last year. For health ecosystem, we offer many health products, and we continuously improve our product matrix. We launch new insurance products, and we target different cohorts, including elderly patients and female patients, and we launch specific products to them. Such innovation has driven a lot of growth. In terms of digital life and smart living, other than traditional types of insurance, we have many innovative products that have been launched, and they have driven our growth in the first quarter. For example, pet insurance and other types of accident insurance. Final question. You have obtained profit for 2021. Overall cost ratio has dropped to below 100%. So what is your target for 2022? Well, all along we want to maintain quality growth. So 2022, in terms of underwriting, we still want to achieve underwriting profit to continue to pursue quality growth. Thank you. Thank you, Madam Zhang.
The next company is China Life Insurance Company Limited. Headquartered in Beijing, China Life is a life insurance company listed on HKEX in December 2003. China Life is a provider of individual and group life insurance, annuity and accident, and health insurance in China. With a controlling stake in China Life Pension Company Limited and significant stake in China Life Property and Casualty Insurance Company Limited, it has expanded into other insurance-related areas. Today's representative from China Life is 𝗙𝗴𝗲, Security Representative and General Manager of Board of Directors Office. I will now pass the time to her. Ms. Li, please.
Hi, thanks for the introduction. First of all, I'd like to thank the exchange for the opportunity to present China Life, and thank you all for listening to my presentation. In the short time span, I hope that I can have you leave with a knowledge about China Life, about the life insurance sector in mainland China, and how China Life has been doing recently. Page 5, please. If taking into account the establishment of our forerunner company, China Life is the longest standing life insurer in mainland China, dated back to 1949. Then the forerunner company went through 2 rounds of restructuring due to the requirement that life and the P&C business should be operated separately. So the current listed entity, China Life Insurance Company Limited, was established in 2003 after the restructuring and went public in Hong Kong and New York the same year. Then we returned to the Shanghai A-shares market in 2007. This made us the only financial entity listed in these 3 exchanges in mainland China. Ever since its establishment, China Life witnessed a rapid development, continuously maintaining its leading position in the life insurance market. Page 6. This slide shows China Life's ownership structure. You can say that the company is 68% owned by China Life Insurance Group Company, who is wholly state-owned, and public investors of H-shares and A-shares owns the remaining 31.63%. We also major shareholders, as the introduction says, that the major shareholders of China Life Asset Management Company, China Life Pension Company, China Life Property Casualty Company, and 𝗙𝗲𝗲 Bank, and have a growing business synergy with each of them. Page 7. Here are some key figures showing our strengths by the end of 2021. China Life is the largest life insurer in mainland China, both in terms of total insurance premiums, total assets, total sales force, etc. Actually, one of the factors differentiates China Life from other peer companies is our most extensive distribution network, fully covering urban and rural markets. The number of tied agents of China Life stands at about 890,000, and they are based in over 19,000 branches, sub-branches, and field offices all over the country. Next page. This picture illustrates the layout and extensive reach of our distribution network. You can see our presence at different tiers of market. Such full geographical coverage is unparalleled in China's life insurance industry. Page 9. To continue to maintain our leading position in the market, we never stop advancing with reforms in keeping with market evolution. In 2019, we launched a comprehensive organizational transformation program, internally called the 𝗙𝗴𝗲 Project, to reshape the organizational structure and tap into the potential and vitality of market-oriented mechanisms. The goal of the project is to build a streamlined, efficient, and vibrant organization driven by the two engines of market-oriented mechanisms and technology empowerment. In the 3 years of execution, namely from 2019 to 2021, we have presented a set of performance far beating other major insurers, indicating the success of the project. Getting into 2022, 𝗙𝗴𝗲 Project has more tasks to fulfill. Page 10, please. With years of rapid development, China has become the second largest insurance market in the world. However, considering its large and rapidly aging population, underdeveloped health and pension insurance business lines, the long-term prospect of China's life insurance sector still looks promising. Its insurance penetration and per capita premiums paid are still lower than the global averages and far below that of Hong Kong. The second graph shows that commercial health insurance covers only 4% of the total health expenditure in 2020, and the commercial pension insurance as the third pillar in the social security system is nearly negligible. On the macro level, supportive policies are expected with the central government regarding commercial insurance industry as an important force in the Healthy China strategy and for proactively addressing population aging. On the micro level, however, steadily increasing per capita income coupled with rising insurance awarenesses will give rise to stronger demands for insurance products. Next page. Just talked about some of the challenges the industry is facing at the moment. But having said that, we still regard these external and internal challenges as temporary, and there is still a large potential growth to be tapped in China's life insurance sector. Now turn to page 12. Even under the aforesaid pressures, China Life managed to deliver a solid set of results in 2021, indicating the company's strong tenacity in the down cycle. Page 13. Some highlights about the company's performance in 2021. From the insurance business perspective, we continue to maintain the #1 position in the life insurance sector in terms of total premiums, embedded value, and value of new one-year sales. At the same time, of net profit rose by 1.3% to reach 50.9 billion yuan, and the board has decided annual dividend of 65 cents per share with a payout ratio of 36% to be approved by the upcoming annual shareholder meeting. We maintain a tight risk management system safeguarding our development on all aspects. In the integrated risk rating by the insurance regulator, we have been rated A for 15 quarters consecutively. Page 14. Our 3 major distribution channels maintained steady business growth in 2021 amid all those challenges. The total premiums of the individual business channel reached 510 billion yuan with a slight 0.3 decline. The bancassurance channel grew by 20%, while its business value contribution being expanded due to better business mix. The group business channel grew by 1%, and its total premiums reached 19 billion yuan. Next page. This slide shows China Life's investment portfolios. By the end of 2021, the company's investment assets exceeded 4.7 trillion RMB, 15.5% higher than the end of 2020. And this also made China Life the largest institutional investor in China's capital market. In terms of the major asset categories, the company seized market opportunities by timely increasing fixed maturity financial assets allocation from 42% to 48%, prudently controlled exposure of stocks and securities funds from 18% to 8.8%, and debt-type financial products changed from 11% to 9%. Next page. In 2021, thanks to the stable increase of interest income, the company's net investment yield reached 4.38%, up by 4 basis points, 4 basis points compared with 2020. However, affected by the drop of A-share market, gross investment yield and comprehensive investment yield was 4.98% and 4.87% respectively. Next page. In 2021, due to the combined impact of stable business operations, fairly good investment performance, and the updating on the discount rate assumptions for reserves of traditional insurance products, the net profit of the company was 50.9 billion, up by 1.3% year-on-year. The weighted average return on equity was 10.97%, down by 0.86 percentage point year-on-year, and the earnings per share was 1.8 yuan, up by 3 cents. Next page. By the end of the year, the company remained well capitalized as core and comprehensive solvency ratios stood at 253.7% and 262.4% respectively, far higher than the required levels by the regulator. Page 19. By the end of 2021, the company's embedded value reached 1.2 trillion yuan, an increase of 12.2% compared with the end of last year, of which the adjusted net worth increased by 18.6%, amounting to 674.3 billion yuan, while the value of the in-force business after cost of required capital increased 5% to 528.7 billion yuan. In the same year, due to new business decline, the company's value of 1 year's sales declined from recent year's high base and amounted to 44.78 billion, down by 23.3% year-on-year. Okay, page 20. China Life is dedicated to building a world-class life insurance company and has already been a well-known brand worldwide, with brand value and influence rising constantly. In 2021, the company continued to be recognized in many international and domestic awards and rankings, as demonstrated in this slide. I won't get into details for this for the benefit of time. Okay, next page. With the strategic goal of building a world-class responsible life insurance company, we have integrated ESG concepts into our management principles and operations. Firstly, being a life insurer, we are able to actively participate in the multi-level social security system for the interest of the wide public. In addition to these welfare undertakings or fight against some social distresses, we also promote green investment and green officing to play our fair share in the emission peaking and the carbon neutrality goals of the country. Next page. Next, I will give you a brief introduction about the operational concepts that China Life holds in order to achieve these results. Page 23. There are 4 major sales distribution channels, each positioned to fully mobilize their distinct strengths. The individual agent sector is the key channel and builds the company's core competitiveness. We have 820,000 tied individual agents by the end of 2021. The group insurance channel aims at corporate clients. There are 45,000 direct sales representatives. The bancassurance channel generates business by cooperating with major banks. We have 25,000 account managers. The online insurance channel explores online-offline integration with other sales channels while also expanding pure online businesses. Okay, next page. In operations, the company adopts a customer-centric approach and continuously leverages internet-based and intelligent tools to carry out efficient operations and provide high-quality services to customers. This slide just lists a few examples of how we using technology to empower our operation and services. For example, the clients can do all their transactions or make changes of their policies on the China Life Insurance app. Today, nearly all policy application and policy changes are conducted on the app by our clients, and so is the majority claims settlements. Moreover, we are the first insurer to provide a senior-friendly version of the China Life Insurance app to help senior people with their transactions. Page 25. Life insurance policies are very long-term, which means our liabilities have a very long duration, and we need to lengthen the duration of our investment assets to reduce reinvestment risks. This is the basic principle in our investment management. Therefore, as for strategic asset allocation, we take asset liability matching as the core and make efforts to reduce the asset liability duration gap. We also need to catch market opportunities from time to time. In this, we incorporate tactical views on account level and deviate from the strategic asset allocation principle when appropriate. We have our own investment team, but most of our assets are entrusted to external asset managers. We make sure that these asset managers have distinct investment styles and complementary strengths. Next page. About the investment risk management, the company continuously built the long-term mechanism for risk prevention, further improving the multi-dimensional risk quota management system and the major investment risk disposal mechanism. Regarding market risks, by the end of 2021, the asset liability duration gap was further narrowed by about 0.6 year compared with the beginning of the year. And we prudently controlled equity exposure, lowering the market risks caused by equity market volatility. Regarding the credit risks, by the end of 2021, over 97% of the company's credit bonds had AAA ratings, and over 99% of non-standard fixed income assets also had triple external ratings. And amid the accelerated credit risk exposures, China Life did not encounter any default events in 2021. Page 27. In 2022, faced with the challenges, we will do our utmost to make progress while maintaining stability and continue to deepen reform and innovation by focusing on the below 6 aspects. First, we'll continue to put equal emphasis on both business size and business value. And second, we will stabilize the skill and improve the quality of the sales force, promote the transformation of sales force to be more professional and specialized. Thirdly, we also will coordinate development and risk control for the smooth operations. And fourthly, adhere to customer centricity and continuously strengthen innovation of insurance products and services in response to the customer's demands upgrading. And fifth, making further breakthroughs in digital innovation and continue to strengthen technology empowerment on all aspects of our operations. Last but not least, further intensify market-oriented reforms and cultivate new growth drivers. This brings us to the end of my presentation.
Thank you, China Life. The next company is China Reinsurance Group Corporation. China Reinsurance was co-founded by the Ministry of Finance of the People's Republic of China and the Central Huijin Investment Company Limited. Having been listing on HKEX since October 2015, it is the first reinsurance group listed in Hong Kong. China Reinsurance is the only state-owned reinsurance group in China. It has various subsidiaries that provide a wide range of products and services, including reinsurance, direct insurance, asset management, insure brokerage, and insure media services. Please welcome 𝗙𝗴𝗹𝗹, Spokesperson, General Manager of Board of Directors Office. 𝗙𝗴, please.
Respected investors, analysts, and friends from the media, good afternoon. I am delighted to have been invited by HKEX to participate in this summit meeting and to share with you the latest development of China Reinsurance. In the past year, this is the starting year of our 14th five-year plan, and we had a very good start. Now, upcoming, I will talk about our competitiveness and our strategy and the implementation. Our China Reinsurance is the only state-owned reinsurance in China. We are ranked number 1 in Asia and number 6 in the world. In the past year, we had made ourselves into the Global 500, Fortune 500, and the 500 best brands in the world. Next page, please. We have evident privilege and advantage in our competitiveness. We are the main supplier of reinsurance, and we continue to build our strength. We have a mutually beneficial customer relationship, and we in the One Belt One Road insurance system, we played a very important leadership role. And also in 2018, when we acquired the UK insurance company, and it has become the first ranking in company of the same type. We have over 40% of our talents ranking in the A grade area. So as far as keeping of talents, we are doing well. And we have a very strong domestic data in reinsurance. We have 71 continuous years of experience and have accumulated rich data. We worked with the various energy and natural disaster institutions in China and building mathematical models that lead the industry. We had successfully launched the properties as well as natural disaster and seismic as well as typhoon and other natural disaster insurance items. We are a very important participant in the standard setting of the insurance market in this industry, and we have set the standards for reinsurance as well as claims. And we have been developing very stably and very steadily. Our structure is very stable, and we have a very comprehensive product mix. We had all along been keeping grade A in this S&P grading system. In 2021, we in our integrative solvency adequacy ratio has been kept at over 200%. And as far as the regulator is concerned, we are ranked as one of the best insurance providers. Now, upcoming, let me talk about several areas. And we had been following one blueprint and also using 4 major focuses and 5 in enhancement policy and strategy. We had been insisting our core business and building our international standards in 2021. In this strategy, we also tackled market changes and made internal reforms. We had made multiple, the first core is that we insist on reinsurance being our core business, and the 4 columns of support would be our product innovation, our platform drive, our technology empowerment, as also international mobilization. And also, we work based on the country's need as well as the market needs to enhance ourselves into important contributors to the society. And the 5 enhancement in the areas of value, data, ecosystem, talents, as well as culture. Our target is to become an integrated, high-value reinsurance group. Next page, please. To actively participate in the country's strategy and also to drive new business development growth drivers. So we wanted to connect the industries with the insurance and around natural disaster protection, healthcare, Chinese healthcare, and the dual carbon reduction targets, as well as countries' governance and the Belt and Road, these being the 5 major areas of our development. In 2021, we had close to 200 new products, and we had close to 20 trillions of values that are under our insurance protection. And also, we had over 40% of healthcare-related strategy products. Now, from the globalization perspective, this is a very important piece of the puzzle. We had deeply participated in 16 reinsurance, the disaster insurance of. Now, the extraordinary floods in Henan last year had reached a 10% claim. This is much higher than the 0.5% that had taken place with the earthquake disasters previously. So this goes to say that we are playing a very important part in our natural disaster insurance products. And we are also launching Hong Kong's first product of this type in terms of natural disaster insurance products. And this is a very meaningful element. And also health strategies as it relates to insurance. Now, this is very important. Providing reinsurance to the vaccines, and also to provide 10 billion of insurance for exporting of vaccines from China. And in 2021, the country already has 28 provinces participating in our reinsurance. And our group had participated in over 50 projects over the year and covering about 50% of China's population, so that people can, at an affordable price, to get the protection for themselves, especially the seniors and all that.
Thirdly, we have the dual carbon targets. We actively promote a number of green construction, agricultural, insurance, etc. We are one important institution supporting overall green investment in mainland China. So we have set up new yardsticks for the rest of the industry. We have 24,000 frontline staff, and we have reduced the emission of carbon by 302 million tons. So we focus on a lot of new energies in terms of the protection, and the premium is about 10 to 15% compared to the entire market. Compared to other offshore wind farms, we provide extra risk protection. We are also engaged in venture insurance, and the scale has been expanding continuously. By the end of last year, the green development segment, we achieved a 34% year-on-year growth. Number 4, we are also working in line with other types of national governance and system constructions. Our group has grasped the opportunities to offer insurance opportunities to a number of innovative IDI businesses. We have already taken over more than 700 projects in this area. Total premium is close to 500 billion. We have this property prevention insurance covering Shanghai. The premium revenue has grown by 25.7% year-on-year. We also offer extra protection to enterprises, incident insurance. Number 5, we have safeguarded the Belt and Road construction. We have taken the lead in operating this reinsurance activity by involving 19 overseas and also domestic reinsurance entities. We have provided risk protection to various projects, including those in Singapore and also the UK. So in Singapore, London and Beijing have formed a very good protection network for Belt and Road projects. We have launched the Belt and Road investment guidelines to promote green investment. Next page. We have launched the Digital 2.0 strategy to speed up digitalization. We understand that this is one important momentum driving forward the development of the industry. So we have already set our 2.0 strategy. And we have invested more heavily into digital constructions, and we have achieved very outstanding results. We have doubled the number of IT talents, and in 2021, we have completed iteration upgrading, and we have set up a very strong platform so that we can focus on the traditional pillar and also digital pillar and enhance the level of technological investment. Our group has this target of no less than 15% in terms of increase in terms of technological advancement during the 14th five-year plan. We will continue to focus on innovation. We will also look into unicorn companies to identify new investment opportunities. Our revenue exceeded 23 million renminbi. In the past, we have been purchasing overseas modules. Since establishment in 2018, we continue to focus on strengthening our internal capability. So we have a number of IP models covering earthquakes and other disasters. And we have started commercial use of such models. And we are the only entity that has launched this earthquake model 3.5. We continue to perfect our international layout and enhance our management level. It is a natural yearning for us to go global. So we have been working on our global footprint, and we have entered successfully the UK market. So we are the first Chinese enterprise to achieve that. During the 13th five-year plan, we continue to perfect our international footprint through acquisition, and we have entered a new era. We have entered 11 countries and regions, and their premium revenue is 18.9%. Offshore investment asset takes up 25.9%. We have already become one reinsurance entity with the most well-developed overseas network. And we have stabilized our operations, our business, and also our teams. We have achieved the level of performance that is better than the average of our peers. So we will continue to turn our group into a platform with diversified global risk. We will continue to deepen our refined management methods. We will continue to leverage on our leading position and strengthen our expertise level so that we can achieve the greatest level of synergy. So this is a brief introduction. Thank you again, investors and analysts and friends of our media and other friends, for your long-term concern and support. Now I will hand the time back to the host of the event.
Thank you, 𝗙cie and China Reinsurance. The next company is Prudential PLC. The company provides life and health insurance, as well as asset management in Asia and Africa, with over 18 million life customers. It's listed on HKEX in May 2010 and made a successful placement on HKEX last year. Without further ado, let me introduce today's representatives from Prudential. James Turner, Group Chief Financial Officer, and Lilian Ng, Chief Executive of Insurance. James and Lilian, please.
Thank you. And first of all, let me start by thanking the Exchange for hosting this session, and to our current and future investors and analysts for this opportunity for Lilian and I to share our passion for Prudential and why we think it's a compelling investment case. Because, as our kind introducer said, we are a leading Pan-Asian and Africa-focused life and health insurer. We've got a unique asset management capability as well. And very simply, our purpose is to help people get the most out of life. And we do that by making healthcare affordable and accessible, by protecting people's wealth, and by growing their assets. We're focused on the largest markets in the fastest growing regions of Asia and Africa. And as you've heard, we have 18.6 million customers, and we're building the capacity to serve 50 million customers by 2025. We are over 170 years old as a company, and our experience and our trust with regulators, policyholders, policymakers, and communities reflects that heritage. And in 2023, we celebrate our centenary in operating in Asia. And policymakers recognize the important role that we play as a pillar of the social safety net. And long before ESG was as trendy as it is today, we've been servicing the S and providing services to society. And we're also taking steps to align our business more closely with the global transition towards a lower carbon economy. And as a steward of long-term capital and a protector of people's lives, we're driving that decarbonisation in a way that is both just and inclusive for our customers in Asia and Africa. So in 2021, alongside a new set of near-term measures, we announced a goal that the assets that we hold and that we manage on behalf of our insurance businesses will become net zero by 2050. Now, if I turn to slide 5, that growth that we've achieved has been underpinned by a rising unmet consumer needs. Over the past few years, we've aligned our business closely with the long-term structural growth drivers in the region. And many of the earlier speakers have made reference to some of the key points, because despite the fast rising prosperity, people in Asia still have low levels of insurance cover, with over 40% of health and protection spend still being met through out-of-pocket expenditure. And this creates a vast health and protection gap that's been estimated at over $1.8 trillion. Even larger is the $83 trillion mortality gap, representing the income that families forego when they lose their breadwinner. And it is these long-term structural underpins that, together with the rising demand for savings and protection across this region, that creates a significant opportunity for growth and for value creation. And it's at the core of the investment case for Prudential. If we turn to slide 6, the next slide, you can see that we've built on this track record of delivering sustainable shareholder value. We have a strong franchise, and we've delivered a track record of strong compounding growth in all of our key metrics. And the key is our relentless focus on operational improvement, enhancements to our capabilities, and the disciplined execution of our growth strategy for almost a century now across Asia. And our full year 2021 results show that this has continued. In our full year results, we reported continued strong growth in new business profits, embedded value, IFRS operating profits, and operating free surplus. Because it shows that Prudential has the capabilities, operational resilience, and capital disciplines to continue to generate substantial value for our shareholders. As our introducer said, in 2021, we also listed a new listing on the exchange, and so you have an opportunity as well to invest in Prudential locally, matching that of our customers with our investment opportunity. And I'm now going to hand over to Lillian, who will run through our distinct competitive advantages, as well as our multi-channel distribution model, which we believe gives us an important edge. Lillian.
Thank you, James. Now, as a group, we have a leading position in key markets and segments. And first, China. China is the largest life insurance market in Asia. And so through our 50-50 joint venture with the CITIC Group, our business has delivered quality, resilient growth. And we have access to almost all of the country and scaling up our strong platform in key city clusters. We're present in all 9 cities in the Greater Bay Area, plus Hong Kong. So we have the capabilities to optimize with the huge scope for sustainable growth. In India, we are the major investor in a top 3 player in both the life insurance and asset management sectors, and there are ample of opportunities from household savings and protection gap. And as the business continues to broaden our reach with both agency and partnerships there. Indonesia is the largest economy in ASEAN. It is also home to 230 million Muslims, the largest number in the country, while Islamic finance is an essential economic growth pillar. So Prudential has a market-leading franchise and the #1 in the fastest-growing Sharia segment. So with our recently launched standalone Sharia business, we have strengthened our competitive advantage to capture the next wave of growth in Indonesia. In Thailand, our focus is to deliver the strategic benefits of our recent investment and upscaling the business through bank partnerships with TTB, that is TNB Thanachart Bank, and UOB, United Overseas Bank. Although not in the slide, our Malaysia and Singapore businesses are actually the longest operating in the group now. And together, they deliver 30% of our group's new business profits and represent a substantial source of diversification for our platform. And finally, Eastspring, our asset management arm, has over $258 billion of funds under management and a good cost-income ratio. And this excellent platform provides us access to the fast-growing demand for wealth solutions across the entire region. Now at Prudential, we put customer at the heart of what we do. That is why we embarked on a multi-distribution strategy, so our customer can choose how they want to be served. And move on to the next slide, please. Firstly, our agency. Our agency force is the premium advisory channel to serve customer. Now we have breadth with over 500,000 agents, and we have depth with 40% of our sales generated by our elite MDRT agents. Now, agency channel is our largest source of new business profits and is crucial in building long-term value from those relationships. So to retool our agency force in light of changing customer expectation, we are upgrading their capabilities with learning, coaching, and analytics, helping them to stay connected with our customer, deepening their trust while providing tailored advice, or facilitated digitally. And we are seeing results through the agency operating metrics as we continue to deliver for our customers. Next slide, please. Now, we lead the global bancassurance industry by reimagining partnerships. Now, together with our partners, we help customers to access affordable healthcare and protect their wealth. We work with more than 160 bank partners and access to 26,000 outlets. And we continue to invest to deepen and expand our network in order to reinforce our leading bancassurance position. We are also transforming partnerships with digital banks and digital platforms with advanced technology and analytics so we can offer products that resonate with these customers. Next slide, please. Now, Pulse is our end-to-end customer digital platform, from engaging to onboarding and to fulfilling. And Pulse is available in 17 markets, offering 11 languages across our footprint. This is now operating at scale with 13 million registrations since launch in 2019. Now, Pulse tend to attract new customers that are younger, so we reach them earlier in their life cycle. Now, as they accumulate wealth over time, we have the opportunity to upsell and cross-sell to meet their changing needs. So in Pulse, customer can do self-direct purchase and or engage with advisory channels for advice and fulfillment. Now, Pulse and our digital platform facilitated 11% of new business sales in markets where Pulse is available in 2021. So I've taken you through our competitive advantages in our geographic footprint as well as our multi-channel capabilities. I now hand over back to James to wrap up.
Thank you, Lillian. And if we can turn to the final slide, slide 11, and we've deliberately left time for questions. hopefully what you can see in this short presentation is that we have a very compelling investment case. Our business model is aligned to the strong structural growth drivers in our markets. We have a high-quality, diversified portfolio of businesses across 15 markets in Asia and 8 markets in Africa, with health and protection as a particular focus for the group. We're skilled in the design and pricing of modern health, protection, savings, and investment products, and these address the unmet needs of the communities that we serve. We have a distinctive culture, and that is focused on innovation and growth, with over 200 new and revamped products launched in 2021 alone. Across the region, we have a multi-channel distribution model comprising over 540,000 agents. We have access to more than 26,000 bank branches and a modern, internally developed, scalable digital platform impulsed by Prudential. This is an innovative solution which covers health, wellness, fitness, diet, with links to doctors and hospitals in many of the markets in which we operate. We have a leading scaled regional asset manager in Eastspring, and we have a strong track record in effective capital allocation and risk management. We are targeting double-digit growth in embedded value per share, supported by new business profits growing substantially ahead of the fast-growing GDP in our regions, with substantial growth in operating capital generation to fund that growth and deliver appropriate returns to our shareholders. The Prudential stock code is 2378 Hong Kong, and I'm very grateful for this opportunity to share with you what we believe is a very compelling case for new investors. Over to you, Maggie, for the Q&A session, please.
Thank you, James and Lillian, for the presentation. Now let's enter into Q&A session. Once again, please use the Q&A tab to submit your questions. Thank you. We've got the first question. The first question goes to Lillian. What is your Greater Bay Area strategy? Thank you.
Thank you for that question. As I highlighted earlier, our Greater Bay strategy has a synergy across our China business and our Hong Kong business. We are actually present in 9 of the mainland cities in the GBA area, as well as obviously in Hong Kong. And our Greater Bay strategy is to actually share product development in terms of the needs of products across the Greater Bay Area, as well as creating also a servicing model that customer can be serviced across the 2 businesses. We see there are opportunities in the Greater Bay Area where it's actually targeting to the young, more dynamic segment, given it's sort of attracting the talents. It's like the Silicon Valley of the US. So we are creating a lot of product development and servicing to suit that the younger channel through also our digital platform. Thank you.
Thank you. The next question goes to James. Prudential completed its equity raise in Hong Kong in late 2021. What is the group doing to support and improve the trading liquidity of the Hong Kong line? Thank you.
No, look, it's a great question. It's something that I'm actively monitoring. So we've done a few things, right? So one thing is to recognize that we are truly an Asia and Africa focused group, that we've started to look to move our analyst coverage from that of being European to being in Asia. And so together with our brokers, we've really encouraged our coverage and our analyst coverage to be based out of Asia. And now we've got 3 analysts that are covering us as purely out of Asia, and then a 4th that is out of Asia and Africa. So that's one thing. The second is that we've started to engage with stock commentators, and we've recognized the importance of more local engagement. So Lillian, who is joining me today, has been leading on a number of sessions that we've done with stock commentators and local influencers and brokerage, because we recognize that the importance of getting the stock and the 2378 far more broadly advertised. Because traditionally what we've done is we would spend a lot of time on our brand and on our advertising, but we weren't advertising Pru as an investment proposition. We were advertising Pru as a provider of products. And now we're doing both, because with our listing in Hong Kong and the greater liquidity, it gives customers an opportunity to also invest as well as have products from us. And one of the things that we're really pushing for, and it comes right from the beginning of this session today, when your CEO opened the session, is Stock Connect. So we know the importance of reaching the requirements for Stock Connect, and therefore being able to support that southbound and northbound flow, but really the southbound flow. And so that's something else that we're very targeted on, to get into the HSCI composite index, and then have connectivity through Stock Connect, which we think will also drive further support for the locally for the stock. Those are the types of activities we're doing. We're also supporting it with any corporate activities. So I can tell you personally, I recently, and because they're all announced, I think I recently bought 10,000 shares on the stock exchange in Hong Kong, because I thought it was at a great price point, and I thought as a director I would show my support for the stock on the Hong Kong line. But we're also doing that as a corporate in terms of things like share purchases for staff, etc. So we're doing everything we can to support the investments in Hong Kong and drive that liquidity.
Thank you, James. The next question comes from Kenneth Cho from Citi. Can you also talk about your eSpring asset management business, please? What are the synergy or cross-selling between your core insurance business and eSpring? Thank you.
So Ken, thank you for that question. Look, we think in eSpring we have a unique opportunity to have both that asset management capability within the insurance company, because we know that for our customers that it starts with the customer and providing customer with the very best return. And 80% of all return comes from strategic asset allocation. And with eSpring, we have the opportunities with centers of excellence to have that direct access into the insights that come from having a asset manager of scale. It also enables us to work very closely with the asset manager to build products that support the investment propositions for our life company. And so having eSpring within the fold means that we not only, because clearly we work with other asset managers, not just eSpring, but it really enables us to help ensure that our customers have access to the products that they need to support our propositions.
Thank you, James. The next question is, Prudential is one of the leaders in the digital insurance space. Can you tell us more about the Pulse ecosystem? How does it support sales and customer engagement? How does Pulse complement your other distribution channels? Thank you.
Lily, do you want to start with that one and I'll pick up?
Okay, thank you, James. So Pulse, as I mentioned, is our digital customer engagement platform. What it does is actually, obviously, it provides an end-to-end health and wealth services to our customer. At the same time, what it also tries to do is help us to acquire new customers. And as I mentioned earlier, what we see in terms of the registration tends to be the younger generation. And so what we have also offered in Pulse, it's what we call a shop front, so that they can actually do any self-direct purchase products that they may not require or do not require advice. And so that is what we do in Pulse to deliver for our younger generation customer. But as customer actually, when they grow and when they accumulate wealth, their needs will change. And also within Pulse, within the platform, also help them to actually engage with our advisory channel, because your question was, how does it work with our other channels? So it actually it's also a platform for our customer to engage with the advisory channel, whether it's agency or with our bank partners channel, so that they can offer advice all through a digital platform and also to fulfill. So overall, it's a ease and convenience for our customer to engage with us through PULSE. So this is what we believe is the power of our digital platform. It does more than just sell.
But Lillian, it's a key point, but it's probably also worth flagging to our listeners today that in the markets in which we operate, 11% of our APE, it is a core part of our distribution proposition and is part of that multi-channel distribution capability that Lillian set out with agency and with banker, that we think positions us very uniquely across the region.
Thank you. The next question is, do you have any fintech service for clients in mainland China going forward? Thank you.
So, in terms of, you mean in China alone? Okay. So in China, we operate under 𝗙𝗹𝗹𝗍 Life. So in terms of a digital and technology platform, it's quite a well organized, well run through that virtual platform and so on. I think in terms of fintech service, actually that is fully available through that platform that we have in 𝗙𝗹𝗹𝗍 Life. Again, where you can engage with customer through a virtual meeting room, you can service the customer. As well, the customer can actually, through our digital platform, do claims, because these are the moments of truth. So we strongly believe we are providing true fintech services through our current business already, through our 新移通, which is the platform that we call in 𝗙𝗹𝗹𝗍. In terms of the sales of digital business, we also have our products on a lot of what we call the product aggregators in China, such as 𝗙𝗎 and so on, so that our customer can also have a choice if they want to access 𝗙𝗹𝗹𝗍 products.
The next question is, can you share your ESG goals and strategy in 2021? 2022, sorry.
Sure. So let me start off on that one. So look, we made a number of commitments. We've committed to reduce our own carbon emissions actually by 2030 to become net zero within our phase 1 and our phase 2 own carbon emissions as a company. And then in terms of the assets that we manage on behalf of our customers to hit net zero by 2050. Now, in addition, we've set some decarbonisation targets. So to reduce the measure that we use is the weighted average carbon intensity, the 𝗙𝗍𝗲 score. And so we've committed to reduce the weighted average carbon intensity of our portfolios of the assets that we manage by 25%. Now, aligned with the objectives of the Net Zero Asset Owners Alliance, we have to set further targets in the future. So they increasingly become more stringent in order that we're able to hit the targets for net zero by 2050. So those are the key targets that we've announced for climate. Now, clearly, we're also doing a huge amount under the S and the G. So under both the S, clearly the inclusive products that we offer is going to be key, working with our consumers and our stakeholders to ensure that we offer a very inclusive insurance with everything from bite-sized insurance, but also access through PULSE and our digital offering to health and wellness services. And then in terms of G, in terms of our governance, is something that we've really prided ourselves in the long tenure in our own history to be there in the moments that matter, because insurance is key in those moments of matter. And that is something at Pru that we have a proud history of being there.
Thank you, James. The next question is, Prudential has completed its strategic repositioning following the demerger of its U.S. business, equity raise, and debt redemption program. How does that affect your capital position and future growth prospects? Thank you.
Okay, so again, let me tackle that one. So at the year end, we announced that we had a capital asset, a capital ratio of 408%. But for me, the key things that are easy to access for our stakeholders are that we have a debt equity ratio right at the bottom of our range of 20%. So we've set a normal operating range between 20 and 25%. That alone, together with our incredibly strong capital position, will enable us to fund any bank assurance type transactions. It gives us the flexibility that we need to support the growth and the capital strain that comes from writing products when the markets grow. So when we announced our 2021 results, as I referenced earlier, they were incredibly resilient. But we know that, for example, in Hong Kong, that a key catalyst for our share price will also be when the border reopens. And whilst we cannot predict when that happens, then we do know that we'll need to fund what we anticipate being significant growth. And that obviously will call on capital. And one of the things that I can share with this community is we're going into that position with an incredibly robust capital and liquidity right now.
Thank you, James. The other question goes to Lilian. Prudential is a leading player in insurance business in the region. Can you talk about the potential of this segment and how are you capturing these opportunities? Thank you.
I think as I think James outlined earlier, obviously there's ample of opportunity, given the health and protection gap. But something I want to draw on is given the COVID-19, what we have observed is now customers are actually much more aware of insurance and the need of purchasing insurance. And we see that awareness will help us as we continue to optimize the opportunities through our multi-distribution platform. And I think we see a similar customer behavior across most of the markets we operate in. So I think with people being more health conscious, health aware, I think this is a fantastic time, and we're in the right time, the right place to optimize those opportunities in insurance for Prudential.
Thank you, Lilian. We have a last question. Besides bancassurance cooperation, what kind of other services or products would you expect from commercial banks to support the growth of insurer? Thank you.
I'll take this one quickly.
Please.
James, so actually, when we work with our bank partners, actually, it's what we do is we complement what is the bank offering to customer from an insurance product provider perspective. So this is how we leverage and work together. And we actually, for example, might create synergy and package propositions that may work well for certain of the bank customer segment, whether it's their mass market segment or their premium segment or even their private bank segment. To what we will continue to work on is a lot of our bank partners continue to work on digital platform. And that's where I believe are the growth opportunities, including working with digital banks as well.
Thank you, James. Thank you, Lilian. Thank you, Prudential. Last but not least, we will have China Pacific Insurance Group Company Limited. Founded in 1991, CPIC is an integrated insurance group in China. It has been listing on HKEX since December 2009. Through its subsidiaries, CPIC provides a broad range of risk protection solutions, financial planning, and asset management services along the insurance value chain. In particular, the company offers a number of products and services, including life and health insurance, property and casualty insurance, and health management services. Additionally, they are actively involved in an area of fund management, including third-party assets, pension funds, and mutual funds. I will now pass the time to the company representative, Feng Pan, General Manager of Investor Relations Department. Mr. Pan, please.
Hello, good afternoon. Great pleasure to be able to talk to you online. And at the outset, I would like to thank the Exchange of Hong Kong for giving me this opportunity to talk to you about CBIC's business performance, our thinking, our strategies, and our plans for the future. So given the overview presented by the moderator, I will not delve into the particulars about our basic information. So essentially, CBIC is a leading composite insurance group in China, and we adhere to the pure player strategy. So please refer to page 1. So we provide a wide range of services and products along the insurance value chain through various subsidiaries or specialized operations. For example, there is life and health insurance conducted by CBIC Life and CBIC Health. There is also property and casualty insurance provided through CBIC P&C, CBIC 安信 Agricultural Insurance Company, and also CBIC Hong Kong, an entity located in Hong Kong, specializing also in the P&C insurance. And also we provide investment of insurance funds and also pension funds through CBIC AMC, Changjiang Pension Company, and also CBIC Fund, a mutual fund manager. So as one of the leading companies in China, we boast a nationwide service network. On the side of CBIC Life, we have over 2,700 branch offices at various levels. And on the P&C side, we have over 3,000 branch offices in various locations, provinces, municipalities, and cities across the country. And over the years, after 30 years of operation in China's insurance market, our customer base has been growing in a very steady way. And as of the end of 2021, we have 168 million customers, individual and also corporate combined. Please move on to the next page. Our history, very briefly, we were established in 1991, so we have a history of over 30 years. Last year, we celebrated our 30th anniversary and a couple of milestones in our history of development. In 2007, we IPO'd in Shanghai, and then 2 years later, we IPO'd on the Stock Exchange of Hong Kong. And then in 2011, we launched the first round of transformation called Transformation 1.0. And then in 2012, we conducted a private placement of H shares with certain world-renowned long-term investors. And then in 2017, in response to trends and dynamics of the industry, we launched another round of transformation known as Transformation 2.0. And then 2 years ago, we issued GDRs on the London Stock Exchange. So that's briefly our history. Please move on to the next page. About our business performance, I can safely say that over the years, given our commitment to long-term value growth, we have delivered steady growth of overall business results and increase in the company's comprehensive strength. I will not delve into the numbers or the particulars, but roughly, the headline numbers. The group operating income in 2021 exceeded 440 billion. That means a growth of 4.4% from 2020. And also last year, the net profits was roughly 270 billion, a growth of 9.2%. And also a very important measure of an insurance company's value, the group embedded value, it stood at 498 billion, a growth of 8.4 billion. We are also very well capitalized. Our comprehensive solvency margin ratio in 2021 stood at 266%, pointing to a very strong capital position. And also, we have 2.6 trillion in group asset under management. That is composed of both in-house assets under management, also third-party assets under management. Please turn to our next page. As I said, CPIC adopts a pure player strategy, so we remain focused on insurance. However, on the other hand, also vigorously pursued opportunities to deploy among the emerging sectors, in particular healthcare and also retirement, because we hope that this could diversify the ecosystem of insurance products plus relevant services. So in 2021, we made some big progress on this front. For example, we joined hands with a domestic premium healthcare provider, Ruijin Hospital, and built a telemedicine platform. We also launched CPIC Family Doctors. It's a brand for health services. And so far, this brand has already put in place a dedicated offline team of 400 medical professionals. And to deepen our investment in the healthcare sector, we have established a special fund focusing on mandates in the testing, medical appliances, telemedicine, and other types of medical services. And along the line of retirement deployment, we also achieved some milestone in 2021. So under the brand of CPIC Retirement Home, there are now 10 projects, 10 retirement communities up and running, covering 9 cities across China. That involves more than 12,000 beds in total, including those in the pipeline. Next page, please. We attach great importance to enhancing our customer experience, and we have enhanced our capability in this area in 2021. For example, there was some innovative mechanism called the Institution of CPIC Service Officers. It spans CPIC headquarters all the way down to grassroots branch offices, and it enabled 800 of our employees designated as service officers to reach out to customers so that our brand, CPIC Service, can be more tangible and also more accessible. And over the years, we have improved the width and depth of our services. For example, let me share with you some statistics. As of the end of 2021, about 9% of the existing customers of CPIC Life were covered by upsell. And then on the side of auto insurance, the number of customers with sum assured exceeding 1 million renminbi yuan stood at almost 22 million. That means a growth of 28% from the end of 2020. Next page, please. In terms of technology, in 2021 and also in prior years, we made continued progress in technology to empower our insurance business. For example, we have achieved initial success in the establishment of the data governance system and also the building of middle platforms. So this enhanced our independent R&D capabilities. We also accelerated the building of technology infrastructure, underpinned by 3 data centers in 2 locations, one in Shanghai, the other in Chengdu. This kind of infrastructure really supports our core business systems in a very efficient and supportive way. And 𝗙𝗵𝗍 Cloud, our proprietary cloud, also entered the stage of large-scale production, offering a very massive, very powerful cloud computing service to digital applications such as big data, AI, and Internet of Things. So based upon these achievements, our P&C operation carried out what we call the dark factory or smart factory for its operation, and our life company realized cloud-based distribution and long-distance recording of voices and images during the sales process. What this is required as a regulator to minimize the risk of mis-selling during the sales process. Next page, please. In terms of ESG, I know this is a very hot topic in recent years, and we have also made a lot of headway along those lines. We translated our responsibility as a social corporate citizen into an engine of growth. So we believe that in 2021 we have ushered in a new chapter of sustainable development. For example, we incorporated ESG philosophy into our business management. We formulated top-level design for ESG and set up the relevant supportive governance structure. To be more specific, the board serves as the top decision-making body under which there is a strategic investment and ESG committee playing a central role in ESG management. And also in 2021, we officially signed into UNEP Principles for Sustainable Insurance and also the UN supported principles for responsible investment, both as an asset owner and as an investment manager. Next page, please. In terms of our business performance, essentially, we demonstrate resilience in spite of the headwinds in 2021. First of all, Group EV, a key measure of our value, maintained a steady momentum of growth, and it amounts to almost 500 billion yuan, as I mentioned earlier on in the previous slides. And in terms of its composition, mainly it composed of value of in-force business and also adjusted net worth. And then in terms of the drivers of the EV movement, the positive contribution mainly came from returns on EV and new business value. However, we have to say that in the past 2 years, with increase in EV and the slowdown of MBV growth, MBV's contribution to EV movement has dwindled. At the same time, other factors also impact EV movement, for example, profit distribution, operating experience, and also change to methods, assumptions, and models. So this is highly technical. We're not moving to the details. Next page, please. Under current accounting standards, the accounting profits can be highly volatile. So OPAT presents a very useful supplementary angle to evaluate a life insurer's underlying performance. So OPAT strips out short-term investment movement, changes to evaluation assumptions, and impact of material one-off factors on the basis of net profits. And so in 2021, our OPAT rose by 13.5%, maintaining steady increase. Next page, please. With regard to the life insurance business, in 2027, there were lots of challenges. In particular, there was the resurgence of the pandemic around the world. And also, this was aggravated by economic slowdown and also profound adjustments of the domestic insurance industry. So you can see that our VNB came under pressure, dropping by almost 25%. So in the face of these challenges, we adhered to high quality development, maintained a stable performance and demonstrated resilience. Next page, please. In response to these challenges, first of all, we implemented the Changhang Action Program. Changhang in Chinese means long journey or long voyage. It testifies to our determination to pursue the long term, not short-termism. And we hope that by doing so, we could successfully restructure our agency force so that the agency force can be more career-based, more professional, and also more digitally empowered, shifting away from short-termism towards long-term development. So the performance of our agency channel in 2021, total premiums roughly 25 billion, a growth of 12%. Bank assurance grew by leaps and bounds in 2021 because in 2021 we enhanced cooperation with key partners and deployed resources in key areas. So this channel grew by over 300% in 2021. And the other channel is group channel. It grew by 19% on the back of seeding opportunities arising from government-sponsored business and also contributing to Chinese social security system. Next page, please. Coming back to the particulars about the restructuring of the agency channel, the target is 3 directions and 5 modes. The 3 directions refer to career development, professionalism, and digitalization. And the 5 modes refer to the space for generous income, a very powerful entrepreneurial platform, CPI as a service, which is most caring, we hope, and also the most professional career system, and also the most comfortable work environment. And in 2021, we completed design of the basic law that refers to the rules on compensation and management of agents. And also we have put in place relative sales supportive systems or platforms as part of the transformation project. We've also introduced training courses to empower our agents. And to be entirely frank, this reform will take a long time. And we have already made long-term commitments. Yet in 2021, there was already some signs of change and improvement reflected by the growth of high-performing agents known as CG, which is an equivalent of MDRT headcount. Next page, please. In terms of the products, we focus on the golden triangle of products, namely healthcare, wealth management, and retirement. And apart from insurance products, as I mentioned just now, we also seek to combine products with services. Thanks to our deployment in these areas over the years in a very consistent way. So apart from the insurance products, we have made a lot of progress in deployment under CPIC Home. So now we're able to meet diverse demand from our customers. So last year, on this very same day, the communities in Chengdu and Dali went operational. And we have more plans in the pipeline to expand the presence of our retirement community. Next page, please. On the P&C side, we deepened transformation, intensified business quality control, and delivered steady premium growth with a stable combined ratio in the context of the reform of auto insurance business. So the combined ratio was 99%, the same as that of 2020. That was a hard-won result given the challenges of the auto insurance deregulation. Next page. With regard to the auto insurance, as I mentioned, there was the reform of automobile insurance, and on the other hand, there was also a higher frequency of natural disasters. So in spite of these headwinds, given our focus on business quality control and also customer segmentation efforts, the combined ratio remained stable. And that of the auto business was 98.7%, so roughly stable versus the level in 2020. On the other hand, please move on to the next page. We achieved some improvements in the business quality of non-auto business. The combined ratio improved by 2.4 PTs from the level in 2020. And the non-auto business was driven largely by health insurance, which grew by almost 40% in 2021. And then next by liability insurance, which grew by 25%. And also agricultural insurance, which was also a very important engine of growth, which grew by almost 20%. Next page, please. In terms of asset management, our AUM totaled 2.6 trillion, maintaining a steady growth. So next page, please. So in terms of the investment performance, our comprehensive investment yield was 5.4%. The total investment yield was 5.7%, and the net investment yield was 4.5%. So these results were quite solid, given the decline of interest rates and volatile equity markets. Of course, we believe that CPIC, because we view the long term, we persist in long-term value and prudent investing. So this will be the underlying philosophies of our investment going forward. Next page, please. In 2021, we seized market opportunities and also conducted TAA with some flexibility. So we maintained solid business results in the area of investments. In terms of the allocation strategy, we persisted in what we call the dumbbell-shaped strategy. So on the one hand, we increased allocation into long-term government bonds to extend duration of assets and also to minimize the risk of reinvestment. On the other hand, we moderately increased exposure to equity investments. That includes private equity to increase the long-term returns on our portfolio. So in terms of the share of investments, that of fixed income, roughly 76%, equity investment, 21%. So that's roughly the portfolios of our. Next page, please. Now, there are lots of concerns about rising defaults in China. Actually, CPIC is very prudent about our exposure to credit risk. We have taken effective measures to control such risks. And now there are certain numbers about credit ratings distribution. For example, 99% of our enterprise or financial bonds actually have in this kind of AAA or AA ratings, and the share of AAA reached 93.4%. And also, we boast a very strong performance and also issuer creditworthiness in the private financing instruments. Next page, please. Our plans for the future. Looking ahead into the future, we believe that there will be more challenges. And we are very confident because we believe that under the leadership of the board, we'll stay focused, we'll work even harder, and we're able to meet the challenges head on. To be more specific, in the core business segment, on the life insurance side, we'll forge ahead with the Changhang Action Plan to make sure that we can fulfill our final targets. And we hope that doing so can really reshape the core competitiveness of our life insurance segment. On the P&C insurance side, we will continue to improve our capacity for underwriting profitability. And in terms of investment, the focus is on even more progress in the coordination or alignment between assets and liabilities. And on top of that, we'll also continue to foster the ecosystem of healthcare and elderly care so that we can provide comprehensive solutions and services to our customers. Not just insurance products, but also relevant retirement and health services. And also, last but not the least, we will improve, in a continuous way, the technology so that it can play a more important part in the empowerment of the core business of insurance. That's all for my presentation. Thank you for your attention.
Thank you, Mr. Pan, for the presentation. Thank you, CPIC. Our first HKEX Corporate Access Series event has come to an end. Once again, we would like to thank all of our speakers, sponsors, supporting organizations, as well as our audiences for making today's event a great success. We hope to see everyone in the next event of the HKEX Corporate Access Series, hopefully face-to-face in our HKEX Connect Hall. Thank you very much and have a wonderful evening.